Yo, what is up for everyone watching this on the YouTube replay? Hope you're having a great day. Just so you know, in exactly 8 hours from now, we're also going to be live. If you look in the top left, it's 11:35. Basically at 7:35, right before the market opens. We're going to be live again and like for real this time. So let me give you a quick portfolio update. The market's obviously going to be open at 8 p.m., but it's not open right now. But let me give you a quick portfolio update on how we did on Friday. Is we actually had a surprisingly good week. We were up 4%. Year to date, we're actually up 17. We hit a new all-time high this week. We didn't close at it, but we did hit a new all-time high in this portfolio. We hit 29,000. We also have a Roth IRA, and overnight, or in the after-hours market, Delcath Systems rocketed 26% up after hours from some good results or something. I don't know. But yeah, and we also bought another share of Iron Mountain on Friday, just so y'all know. We bought one share of Iron Mountain at 103 on October 17th, or 2 days ago. So yeah, obviously the market wasn't open yesterday, but yeah, that's our Robinhood portfolio. In this account, it's called our dividend only portfolio because every stock in here pays a dividend. And here's my total percent change on every stock. So the only company we're down on is Carlyle Group. We also have our Moomoo portfolio, our buy and never sell account. What our most recent purchase in here is actually another share of Amazon. I just love this company right here. I think they're a great never sell. We have Amazon in here. Another, in terms of our newest positions, we bought some Ferrari stock, RACE. I'm being very slow to allocate money to them, especially in this environment right now with valuations still a little high. And also we bought some Murphy USA. I've looked at a bunch of oil stocks out there, and Murphy USA really impresses me. It's one of the more better run out there, like oil and gas companies. So yeah, what up, NIJ? I did see that. Yeah, DCTH did go crazy. And then finally, we have, oh my goodness, we have our Webull portfolio. Let me put in my password here. And all time, I just love being fully transparent. In the top left, we're up 19% all time, which is pretty cool. Here's our winners. We got a lot of winners in here like Robinhood, AMD, SoFi, Reddit. We also have some big losers in here like Path, Zoom, Sprouts Farmers Market, which has been recovering a little bit. Progressive Corp is great. So yeah, that is our Webull portfolio. How are we doing year to date in here? Year to date, we're up 29% year to date, and we've gotten $128 in dividends. Hey, what up, Jay? Just want to say that you actually help when it comes to what to look for and invest in. Hey, I really appreciate that, Jay. Hope you're having a great day. Have a great Saturday or Sunday. Today's Sunday. Yeah, we're also going to be live later today. Yeah, we'll get to Tesla stock too. When are you going to do a stream where you look into certain sectors and find, yeah, hey, Prime, I do want to do that eventually. You're right. Great question. He says, I've been talking about for a while. I want to do this stream where I just go look at these watch lists right here and just try and find new companies that are actually good. So we're going to dedicate a whole stream to that one time. But yeah, there's a lot of cool sectors I want to like dabble into. All right. So anyway, let's look at Tesla right here. And Clutch said SoFi. Hey, I love SoFi. I do own them. What's a multi-bagger? That just means a stock that just 10x's. Basically just a stock that goes crazy. So here's Tesla stock. This isn't one I love. So as y'all know, I love looking at a company's financials, and Tesla's stock price is really disconnected from its financials because its financials are bad. In my opinion, Tesla's current financials do not justify at all a $1.5 trillion company. So let me just go over some of their numbers right here. Let's just go down to revenue. So their total revenue, the lifeblood of the company, the revenue's down 11.7% year over year. So the revenue is down 11. You know, again, like if we go to their PE ratio right here, the PE is the price of net income. They trade at 261 times net income. It's okay to trade at that super high valuation as long as you're growthy. But if we go to their main business, their automotive segment, it's down 12% year over year, down 15, down 5. Like this is not a growthy business. And if we go to their other business, their energy generation business, it's down 7.5% year over year. So what you're really doing with this company is you're paying for so much future growth that is yet to happen. Like about $200 of its stock price is actually supposed to come from robo-taxis and robotics. So if you can pay that premium, then I hope you do. I hope you make money. But yeah, if we go to their profits as well, so the revenue's down 11. So the revenue's down 11, and the profits, the net income is down 58. So it's just a tough buy, in my opinion. It's a tough valuation to pay. So let's pull up SoFi stock right here. Now, this is a company that we looked at Tesla. They're at an all-time high, kind of just from momentum. But I really think SoFi is doing really good because it has good quality fundamentals. So check this out right here. If we go to what SoFi does, where the revenue comes from. This is a fintech right here. They have their own banking charter. Yeah, hey, JNiz, if you want to get this software I'm on, it's in the link tree in my bio. First link there. This is actually a brokerage. But look at this. On SoFi, we see their financial services right here. Check out how growthy this is. This is what, in my opinion, justifies the high premium. The revenue's up 105, after it grew 80, after it grew 222, after it grew 260. Like, the growth on their financial services specifically is insane. And it's beating on analyst expectations. The orange line is what the analysts expect in every quarter. They're constantly beating on expectations, beating on net income, beating on EBITDA, like a huge margin too. So what I think is happening is that people are just really starting to take SoFi serious. They're making good net income now. All right, so hey, what up, Hydro? Good morning, man. Oh, he said Beyond Meat. Yo, I feel bad if you own this company. The U.S. has responded no to plant-based meats, and this company is going bankrupt. I would not buy the dip on this one, unless the only reason you'd buy this stock is to hopefully see it like go up a little, and then you sell it on some RSI retrace. But yeah, this company deserves to be at zero. They deserve to be bankrupt, unfortunately. If we just go to their net income, I mean, look at this net income losses. Or let me just first off tell you how much the whole company's worth. So kind of just think about this in the back of your mind. This whole company's worth $49 million. You could buy the whole company for $49 million. So let's say you buy it for $49 million. Well, here's what you're buying. You're buying a company that lost you $30 million this quarter, 52 mil, 45 mil, 30 million. So, and look at this leverage. They have $1 billion plus of debt to pay. I mean, no wonder they're bankrupt and at all-time lows. Vog said, what up? Yeah, by the way, hey guys, this is a brokerage I'm on right here where you buy stocks on. If you want to get it, it's in the link tree in my bio, very first link there. Or all the brokerages I'm using are all in the link tree in my bio. But yeah, this one's my favorite. They're all affiliate links, full disclosure. So if you go and deposit like $100, we'll both get some free stocks. But yeah, out of all the brokerages, this one is my favorite. So what up, New York? You said thoughts on VMD. Oh, we got to look at Meta after this. Oh, someone said QQQ. Actually, we got to look at QQQ after this. So here's Viemed Healthcare. So yeah, they're worth 250 million. Some super small company. Let's see, 250 mil. But this is good. See, these are interesting companies. Like, they're worth 250 mil, but they're making a couple mil of net income a quarter. So there's no bankruptcy risk here. Certainly not. The balance sheet is great. They've deleveraged. They're making a couple mil a quarter. So there's no bankruptcy risk. So actually, I could get behind this valuation and look at the analyst growth expectations. It's supposed to go from 63 to 79. I mean, that's insane. So, yeah. All right. No dividend on that one. Are they doing share buybacks? Let's see. EPS is up 100. So you've actually been diluted by 20% year over year. Maybe that's why the stock is struggling a little. You've been diluted. But I mean, I like that one there for the numbers. But again, I would not trust a meaningful amount of money in that one just because the market cap is so tiny. So here's Meta right here. I love Meta stock. And full disclosure, I do own Meta right here. So if I go over here to my portfolio, I got 5 shares of them. Has anyone seen the new Meta AI Oakley Ray-Bans, like where you can like scroll through Instagram and stuff? Meta faces Gen Z shift. Okay. Is there any news? I don't care. Anyway, let's go look at their numbers right here because they print money. We can see their daily active users is 3.48 billion. So nearly half the world is on one of their apps a day. I mean, pretty insane. But yeah, if we go to this net income right here, this is insane. Meta is doing 15 to 20 billion plus a net income every quarter. And at this growth rate, what's it going to be this time next year? It's literally a $2 trillion company with a 40% net margin. So if you go spend $100 on Instagram ads, $40 of it for them is after-tax net income. The free cash flow is obviously down 19%. Here's what the free cash flow is. It's the cash from operations plus CapEx. So I love that they're actually investing into the future right now. But Meta is kind of lagging on their LLMs, like Llama or whatever is like losing to like OpenAI and Google Gemini. But someone said QQQ, and I'm actually going to give you a life hack. If you like QQQ, this ETF right here, this is the NASDAQ 100, actually check out QQQM. It's the exact same ETF. I kid you not, I can't stress it enough. It's the exact same ETF with the exact same NASDAQ 100 strategy run by the exact same people, same Invesco people, but just with a lower expense ratio. The reason you never hear about this one is because they don't market it. I was just at the airport. I saw a QQQ ad. They're marketing QQQ because they make way more in expense ratio fees. So this is a life hack to basically get the exact, if I pull up the two charts next to each other, and I can actually do that real quick, they're identical. Saves you, for every 1,000 you put in, you save 15 basis points on expense ratio fees. Not too shabby. So yeah, there you go. Here's QQ. Look, you like can't even see the like difference when you zoom out. So there's QQQ versus QQQM. Just one of them has a lower expense ratio. Okay. Yeah, Meta's cool. All right. Emmanuel said, "Can you check out CGC? Let's do it." So this is Canopy. Oh, this is one of those. I don't love this industry. This is in the leaf industry. I can't really cover it on TikTok, but oh, they're Canadian as well. So actually, we'll convert their currency from Canadian to USD. And yikes! So no way. Okay, here's why I want to touch this one. So remember this: the whole company is worth 443 million. But besides the industry, I can understand why this stock is at an all-time low. I think it is just kind of hard to trust this one. Again, the whole company is worth 440 million. So you buy the whole company for 440 million, or you're buying a company that lost you, what was it, 30 million this quarter? But last quarter, they lost 150 million, and then 80 million, 100 million, 100 million, 100 million. These are unsustainable losses. And yikes, have they been diluting you? Well, they can't really. Well, Title Trust or Title Investments is a large shareholder. Anyway, are they growing at least? Let's see revenue. So all these net income losses for a company that's not too growthy. You're mainly just trading this for the momentum of the regulation around the leaf products, but I'd be real careful with that one. Yeah, I don't see much value in that industry. Hey, what up, Jag? Hims, he said Hims stock. Yeah, hey, this company is actually down 15% on Friday after the CEO sold like a ton of shares. Let me actually see if I can find the news. Oh, yeah, there we go. Hims and her CEO sold 11 million of shares, and it was right after the administration wanted to like lower prices. So the future is uncertain, and that's why there's so much volatility. We don't know what the future is going to be because they used to sell a weight loss prescription on their website. They actually used to sell Ozempic, but then Novo Nordisk abruptly out of nowhere ended the partnership. So now they no longer sell a weight loss prescription, but now they're partnering with someone else. Like new news that they're going to sell one again, but for a much higher price, and they won't collect as much margin. So the future is uncertain, but if we look at their growth, it's insane. Revenue's up 72 after 51, after 83. Growth is insane, but the future growth expectation, they actually missed on revenue this quarter. They missed on revenue expectations. They slightly beat on net income, but yeah, they did issue some debt for the first time ever this quarter, which is no big deal. Basically 900 mil of debt. But this is other good news. They're making great net income, easily like 50 mil of net income a quarter. But yeah, it's that future growth expectation that's really worrying investors. And yeah, they're probably trading at like 40 times next year's numbers. Okay, app. Oh, yeah, hey, by the way, if you want to get this app, this is a brokerage software where you buy stocks on. If you want to get it, it's in the link tree in my bio, first link there. Do you know any companies that are super crazy over leveraged? I mean, like, not the off the. I mean, I don't retain those companies in my mind. I don't retain that information, so I can't really think of any now. I mean, some of the restaurants, but it's because of their intangible assets. Like McDonald's, for example, has more liabilities than assets, but it's normal because of their royalty structure. It's an intent. I don't know. Okay. Okay. Okay, IO and Q stock. Yeah, hey, this one is one of your quantum momentum names, and this one's actually one of my more favorite ones because this company has been doing some acquisitions. IO and Q demonstrates breakthrough in quantum chemistry stimulations. Well, anyway, they just acquired a company for $1 billion. I know Amazon stock owns like 100 million of this company, so technically, I guess I do have some exposure via Amazon stock. But check out the growth expectations is 20 mil. It's gonna be 35 mil, and usually they beat on numbers. They're still losing a lot of money, like a lot of money, but it doesn't matter right now because they've been able to issue shares and beef up their balance sheet because of all the momentum around this industry. So there's one of your quantum momentum names that are extremely overvalued, but they have good momentum. Hey, IBM or GE? I like IBM a lot because it's a great. Yeah, hey, I saw DCTH. That was crazy. Yeah, we'll get to I love NU stock. We'll get to that one too. Yeah, PL is just another. We probably won't get to them. Maybe we will. But IBM right here. This is it's a great dividend growth company. Check this out. It's a 2.4, or if you buy the stock right now, you get a 2.4% dividend. So not too shabby. They're also actually, if you like a quantum name, IBM is huge in quantum, probably one of the best quantum names out there because they have the money and the talent to actually be the industry leader, just like Google. Google's another great name. But yeah, if we go to their net, if we go to their PE ratio, it says they're trading at 45 times PE. That's because they had a one. If we look at their EPS right here, it says it went negative 36 cents, or the net income was negative 300 mil. It actually wasn't. There was a one-time adjustment from like an acquisition, so they actually made around 2 billion in net income. So the valuation isn't even that expensive right now, and you get the 2% plus dividend. So I really like this one, and they've kept up with the S&P 500. Pretty cool. Yeah. Hey, what up, Mooncake? Yeah. By the way, if you want to get this app I'm on, it's in the link tree in my bio. The first link there. You know this one, maybe you want to look into it. NSC, is that Norfolk Southern? Yeah, that's Norfolk Southern. Yeah, this is one of the railroad companies. They have like a shared or shared oligopoly with, BNSF and United Pacific and CSX. But yeah, check this out right here. Yeah, intermodal. This is what they ship in their actual trains, agriculture products, chemicals, metals, coals. So let's see. Yeah, they make consistently good net income, 700 mil to $1 billion every quarter. And then they just share that with you via dividends and buybacks. You get a 1.86% dividend. And let's see if they're doing share buybacks. Here's how you tell. So the net income is up by 4.2. So net income's up by 4.2, but net income per share is up by 4.9. So they've bought back half a percent of all the shares. But still, I like this one. One of the railroad names. Oh, what up? Ari said cheesecake stock. Yeah, the Cheesecake Factory right here. This one doesn't really blow me away. Hey, we'll try and get to Chipotle too. But no, the thing with the Cheesecake Factory is if we click on their main business, the actual Cheesecake Factory restaurant, and hey, Rand, thanks for the gift there, that rose. But yeah, if we go to the actual Cheesecake Factory restaurant revenue, like this just isn't really something I want. If you're retiring in 10 years, I mean, this just isn't the kind of growthy stock that'll keep up with the S&P 500, and it never has. But look, I mean, the revenue's up 0.9, 0.7, 1, 3. So like for all time, it's just like low single digit growth. And that's why I think the stock has kind of been flat. I mean, if we go to the weekly, yeah, look at that. They're the same prices they were back in 2018. So you bought the stock in 2018, you're break even on your position, or maybe even slightly down. Anyway, I'd just be careful with that one. Plus, I know a lot of the restaurants have been struggling right now. Does this app have an easy screener? Yeah. So, like, if we go to Wendy's right here, so it's not just the Cheesecake Factory that's struggling right now. Like, if we look at Wendy's stock, like Wendy's, yikes, pretty much an all-time low on them. So I feel bad if you own Wendy's stock. But it's also not just Wendy's, it's also Chipotle stock. So if we go to Chipotle right here, I saw someone saying that one in the chat. This one is, unfortunately, they trade at too high of a valuation. So look at this huge gap down. Like, even right now, I can totally understand why this stock hasn't been doing too well on top of just the whole industry struggling. If we go to their actual valuation, they trade at 37 times net income, and the industry average is 28. So they trade at a super high valuation, and it's okay to have a high valuation as long as you're high growth. And they've been missing on their growth expectations. So check this out. The orange lines what the analysts expect. They missed by a huge margin on the revenue for the past 2 quarters. And that's why they've been so aggressively gapping down on earnings day. High growth company missing on their growth, or high PE company missing on their growth expectations. So if we just go to their total sales right here, the revenue, the lifeblood of the company, the revenue is only up 3%. That's just like that just barely beats inflation. 3% revenue growth. So revenue's up 3, but your net income, your profits are down by 4.3, which means your net margins are falling. Anyway, I can understand why this one's struggling, but I do like Chipotle. They're still printing money. I mean, they're doing a lot of share buybacks too. What is CF? Oh, I thought you was talking about CF stock. Oh, what's up, dude? I know that's this is that agricultural stock. What's your best stock in the infrastructure sector? Probably United Rentals or Amphenol. I mean, I have a lot of that sector. I mean, Comfort Systems, they're all good. Okay, Naruto said Circle stock. You know what? This is actually one of the stablecoin issuers. So if you've heard of USDC before, this is the company that actually owns that and issues it. So your stablecoins play right here. Let's see, are they making money? So that growth is really good. I mean, they just IPO'd, so there's not too much history, but we can see the year-over-year comps. Up 53, up 58. So I love these year-over-year growth rates, but that was the IPO fee. So don't worry about this negative 500 million. They didn't actually lose that. For all the other quarters, they made 60 mil, 30 mil. There's these one-time adjustments that are skewing the scale. But anyway, I do like Circle. The valuation still might be a little high here, though. Like, yeah, look at this. Analysts are expecting them to stay net income positive. Revenue is expected to continue to climb higher. So I do like Circle. That's a crypto play. So going back to NU stock right here. Speaking of a crypto play, then we'll get to Uber after this. Yeah, hey, New York, what sector is that in? I don't know if I can cover that stock, New York. Just guessing by the ticker symbol, I don't know if that's in a sector I want to cover, but we might get to it. But here's NU Holdings right here. This is a great crypto bank stock, in my opinion. And they're headquartered in the Cayman Islands. So, but if you look at this, where does this company's revenue comes from? 92% of the revenue comes from Brazil, which is pretty cool. But the main reason I like this one is because of the net income they're making. Easily 500 mil to 600 mil of after-tax net income a quarter. I mean, it's great. So, yeah, crypto bank out of Brazil. That's where the currency sucks and they actually use it. What app are you using? Yeah, hey, by the way, this is a brokerage where you get stocks on. If you want to get it, it's in the link tree in my bio, the very first link there. Full disclosure, it is an affiliate link. So if you go and deposit $100, we'll both get some free stocks. By the way, all the brokerages I have are linked up there. Again, they ask you for a lot of information and stuff because it's where you buy stocks on. But yeah, I like Webull too and Robinhood. But yeah, out of all of them, Moomoo is my favorite right here just because it's the lowest fee, free brokerage. And I keep my idle cash in here. If you look at the middle of my screen, I got $600 of cash earning me the interest. So let's keep going here. Yeah, we can't cover DK&G either, just because of the sector. Casey said, can we look at MU stock? Let's do it, MU. So let's check this out right here. So my Micron right here, they're pretty much at an all-time high. And here's why I wouldn't sell out of Micron. Even if maybe I'd trim a little bit, maybe sell a little bit of shares, but I would not fully sell out of Micron because I think they're going higher, in my opinion. I've been saying I think they're going to continue to climb higher forever. So check this out right here. Even though they're at all-time highs, they're only trading at 26 times net income. And that's real. Like, that's not some like one-time adjustment either. They're really trading at 26 times net income. If we go to their net income down here, they're easily making 2 to 3 billion in net income a quarter. But the best part is just these growth rates. We go to they're just as growthy as Nvidia and Broadcom in terms of the year-over-year growth rates. But they traded a lower multiple, but the market's finally starting to realize, oh, let's slingshot this one higher because this net income growth is insane and it's real. And yeah, and you get a dividend too, I think. Yeah, 0.3% yield, a 6% payout ratio. So much room for them to raise their dividend. So yeah, cloud memory business, mobile and client business, core data center business. So look at that, your fiscal year growth, 45%. That's great. Oh, hey, watch out for that guy in chat. Let me report that guy to TikTok. Okay. All right. Okay. Any brokerages that don't ask you for no, there's not. Because you got to get your 1099 every year. They got to know. Okay, so Isa said Taiwan Semi. Ooh, let's do Taiwan Semi. Oh, we got to look at Uber too. Remind me to look at Uber. What up, Donnie? What up? Stocks under what? We'll get to all these. What up, Thunder? We'll get to all these stocks. Don't worry. So here's Taiwan Semi, another one that I wouldn't sell, even though they're at all-time highs. They're like Micron, $1.5 trillion company. If you don't know, Nvidia just designs their chips. Nvidia designs the chips, but Taiwan Semi in Taiwan actually manufactures them. And one good news is that they actually have been increasing their Arizona factory. There was some sort of good news down here. TSMC announces 50% price increase for 2 nanometer chip manufacturing. So, hey, that sounds good for the stock, right? But anyway, here's the best part about this company. I can't believe it. They deserve to be at all-time highs. If we look at the revenue's up 35% year over year. So the revenue's up 35, but the net income's up 92. But look at this net income, and this is in USD as well. It's over 10 billion a quarter, and it was 17 billion just in the most recent quarter. So that's insane, the net income they're making. They share it with you too. If you buy the stock right now, you get a 1% dividend as well. So yeah, you can trade stocks via USD. Oh dude, no, you can't do that. That is not. You should not do that. Okay, but yeah. I know there is some like crypto that, yeah, you could buy crypto that is like tokenized stocks. Like I know there's like a crypto out there that follows exactly what Tesla does. There's a coin, but I don't know. Okay. The expectation of Wendy's is very bad versus a company like Chipotle, so the multiples get crushed. Yeah, Chipotle is definitely holding a lot stronger because they'll do just less bad. So someone said U. This is one of the uranium plays. Let's see if they have revenue right now. They do have some revenue. Checked it out. Q4 is like their good quarter. They did 40 mil, but they only did 4 mil of revenue this quarter. Phenomenal balance sheet. Check this out. I mean, let's see. 290 mil of cash and no debt. They're probably earning interest on their cash too. Let me check. Yeah, they made 1.3 million of interest. They're making pretty much yeah, hey, watch out for that. Okay, so anyway, if we go right here, they're making good net interest every quarter. They're still losing like 20 mil a quarter, but yeah, they've just been following the momentum of the uranium because literally 93% of all their revenue comes from uranium. So, and if we just look at the actual uranium ETF, the sector as a whole, the ticker symbol URA, like the momentum has been insane the past couple like months here. So we're trying to source our uranium in the US and Canada. We're no longer buying uranium from Russia and China, especially because they're being stingy with their rare earth mineral exports. So that's why the US is trying to be more rare earth mineral independent. We've seen a lot of momentum toward the US and Canadian uranium stocks. How about unusual machines? Hey, what's the ticker symbol for that one? I don't know what that is. Is the quantum bubble going to pop like RGTI and qubits? Yeah, I think those are two of the like crazy overvalued. Like this is a 13 billion. Like here's QBTS. It's a $13 billion company. You know, I feel like I know what a $13 billion company should like financial should look like, and I mean they're doing 3 mil, 15 mil, 2 mil. So yeah, like Oklo is another extremely bad one. Oklo, crazy overvalued. So let's see here. What about XRP? Have you checked it out? Yeah, we don't really cover crypto on here because there's nothing to really look at. We can just there's no financials, but that's also a cool feature. There's, XRP can't miss on their net income numbers. Hey, Luffy, remind me to look at VRT. I want to get to that one, Vertiv. But here's Uber Technologies. Hey, what up, Catherine? How about Target? We'll maybe get to Target. They're not a good one. They're a dividend play, but here's Uber Technologies right here. This is a great company, in my opinion. Like you just want to buy this one and never sell it, in my opinion. They're that high quality. Their monthly active consumers, not just monthly active users, but people who consume their product. Consumers is 180 million versus 156 million the same time last year. I don't know how, like COVID's over, but they're still growing double digits. Like it's insane. Their main business mobility is up 18 after it grew 25, after it grew 37, after it grew 54. Like obviously the growth rate is slowing, but it just the law of large numbers it's still really impressive. And not just their mobility revenue, but also the delivery side with Uber Eats. That's up 25 after going 8, after going 15. So Uber's a beast of a company, and not just growing top line, but bottom line. This is FCF, which stands for free cash flow, easily 2 to 2.5 billion according to these growth rates. What's it going to be this time next year? And also not just free cash flow, but GAAP net income. This is a great company. Uber's a great never sell. And they also have stakes in companies as well. Yeah, dude, Anchor stock. You guys know that this company is known for their like high quality battery products. Like I have an Anchor like portable charger that like has like a wall plug outlet built into it. It's pretty cool. But here's Anchor Technologies right here. The stock, they're not US. I think they're Chinese. Maybe they're Japanese. Let me check right here. Yeah, they're Chinese. Yeah, they make good money. Check this out. If we go to net income, and this is in USD, we've converted it from Chinese yuan to USD. This company's easily making, 70 to 90 million of net income a quarter. Yeah, same here, ALM. Anchor makes really good products, and you get a dividend. Check out the growth too, but you get 2% of your money back in dividends, and the stock price has been good recently. Maybe there might be some tariff concerns around them, but I really like that one. So UMAC. Oh, that's unusual machines. Let's do it. So, hey, what up, White Shark? What up, Dylan? Oh, we'll look at IREN. We'll look at yeah, hey, try not to spend their White Shark. I got you. We'll look at like UEC or which one? Or just let me know which one you want me to look at. We'll check it out. So here's UMAC right here, unusual machines. Oh, this is a micro cap. Okay. So this company is worth $300 million, $370 million if you look in the top right there. But let's go look at their financials. I know there's been a lot of momentum in a lot of sectors recently. Revenue is $2 million. Hey, I mean, It's so tiny, the revenue, but that's actually a great balance sheet though. Did they like issue shares? Yeah, so they issued 40 million of stock to beef up their balance sheet, which I don't, that's 10% of the whole company, but it fortified their balance sheet, basically saved them from any bankruptcy risk. Yeah, they're still losing a bit of money a quarter. What are expectations? Oh, look at that. So the revenue is supposed to go from 2 million to 4 million. So, hey, dude, Jay, oh my goodness, man. Sorry, I got to mute you, buddy. But yeah, UMAC right here, I like the growth expectations. So yeah, but again, just such a tiny company. It's hard to trust. I mean, $300 million company, probably losing like 50 to 100 million a year. Or I don't know what the expectations are, but I'd be careful. Oh, White Shark said ARQQ. Let's check it out. ARQQ. This is Arctic Quantum. So yeah, a lot of the quantum names have just been super momentumy. I don't. All these are like extreme. Like, look, this is oh wow. So this one has no revenue. 60,000 of revenue, losing 20 mil a quarter. But the momentum is what's great. Someone said QUBT. Wait, that's this one just has the name quantum computing. This is one of the also like more like harder to buy names. I mean, if we go to the revenue, I mean, look, just like think about this logically here. It's a $4.1 billion company. So this whole company is worth $4 billion. It's a startup. I mean, the revenue is 60,000 and it's down 66% year over year. So again, I've been wrong before today. The stock has done really good, but I just can't trust this one with real money unless you got to have a plan to get in and out of these names, I think. Or so some of the more quantum names are better, like IBM, Google, Honeywell. These ones already are the industry leaders. They have the money and the talent, but they're already well far ahead of Qubits, all those Riggedy, IONQ. They're like, okay. Let's see here. Oh yeah, sorry, Luffy. Let's do VRT. This is your kind of like super micro competitor. There's a huge Vertiv factory next to my house. But here's what justifies, in my opinion, this stock being at all-time highs. They're certainly overvalued and expensive, and I wouldn't pay it here. But here's kind of why they're doing so well. If you go to their product revenue, this growth is super good. Revenue's up 39 after it grew 15. It's at a record. So products revenue's at a record. And also their service and spares, that's up 19 after it grew 8. But look at how they're just beating on analyst expectations. That's what, if you're ever wondering why did the stock gap up so much on earnings, it's usually because they beat like crazy versus what the analysts expected. And here's the orange lines, what the analysts expect. Every quarter they're beating on revenue, they beat on net income, they're beating on EBITDA. So it was a triple beat quarter. And they're making, look at that, 150 to 300 mil in net income a quarter. So no wonder they're at all-time highs. All right, so Salesforce stock. Let's do it. So Salesforce, they own some assets I really like. Like they bought Slack. Amazon uses Slack. So many companies in the S&P 500 use Slack. But check this out right here. They have the #1 market share for CRM. And check this out. 24% of the revenue is services, then sales, platform and other, integration, analytics, marketing, commerce. I love how diversified their revenue streams are. They get some money from outside the US as well, but they're a great software name that's making real money. The net income, or look at the revenue. The revenue's up 9%, but the net income's up 32%. So that means they did grow their margin a bit. So they now have a near 20% net margin, highest net margin ever, which is great news. They're also shareholder friendly. They have a 0.67% dividend yield. They're doing some share buybacks. Now, I have read some stuff like their new Agent Force is kind of just like a ChatGPT wrapper. Let's see, is there any Salesforce 60 billion revenue target? Oh, hey, what's the revenue now? Oh, actually, part of that is going to come from them acquiring businesses. If we go to ticker symbol INFA right here, this is interesting. Check this out. Salesforce actually just bought this company. So if you're ever look at a stock and wondering why is it like flat like that, why does it look so weird? It's because they're getting acquired. So all this revenue now, this 400 million of revenue is all going to Salesforce now under their ticker. So another one that's kind of also Salesforce is getting hurt by the AI thesis. Another one that's kind of getting hurt worse for the AI thesis is Adobe. And someone said data leaks and data breaches for Salesforce. I saw that as well. Yeah, not good news there. They could be open to some litigation. But yeah, Adobe right here, another one that AI could replace. Like in 10 years from now, will we need Photoshop? And it's kind of being priced in right now to the stock. I know someone who just made an incredible logo in ChatGPT. It took them like 10 seconds to generate. That would have taken me a long time, and it actually looks good. It doesn't look like some AI generated junk. It actually looks good. So but I'm always a believer that we're always going to need the final touch for art. Like we're especially for like the professional stuff. I think this will get slowly priced out from a AI loser to a slight AI winner. But as much as I believe that thesis, like I have no shares, I have no position in this company. Also, this app is telling me, what is this right here? There is a bearish flag. Hey, yeah, we'll get to, what up, Reggie? We'll get to bull stock. Yeah, remind me to get to that one. I do, Weeble's interesting. So yeah. So if we go to their multiple right here, that's why I really think the valuation is collapsing. Adobe literally trades at 20 times PE, which means they trade at 20 times net income. It's that future uncertainty. But for right now, this is why I like this one, because the numbers are still good. They're easily making 1.7 to 1.8 billion in net income a quarter. What is Adobe doing with 1.8 billion in net income a quarter? Well, right now, since they don't pay a dividend, they're deploying it on share buybacks, spending legit 2 to 3 billion on buybacks a quarter. It's insane. Yeah, hey, Adobe's competitive. You're right. Figma's coming for them. Canva is really good. Basically, like a free, way cheaper Photoshop. Hey, don't tell Adobe, but my After Effects, my Adobe Premiere, and my Adobe Photoshop are all hacked. I didn't pay them. But anyway, don't tell them that. But yeah, if we go to the free cash flow right here, they're making good free cash flow, 2 to 3 billion. And this is what I think Adobe should do. And like in their position, they should buy a company. Like they should legit like do some sort of M&A. Since they're already doing like 2 billion on buybacks a quarter, just buy a company for 2 billion. Buy Figma for 20 billion, or buy DocuSign. Who knows? What app is this? Hey, what up? Yeah, hey, what up, Neon? Yeah, by the way, this is a brokerage where you get stocks on. If you want to get it, it's in the link tree in my bio, very first link there. And full disclosure, it is an affiliate link. So if you go and deposit $100, we'll both get some free stocks. But yeah, it's a free brokerage. And Qubit, we just looked at Qubits. Yeah, hey, we're not going to cover Qubits again. This is just some quantum momentum. This is just some momentum play. It's pure momentum. It's a $13 billion company that legit lost 167 million, but that doesn't matter. It's a company doing a couple million in revenue a quarter. It's obscenely overvalued, but it doesn't matter because the momentum. So that you swing trade down. Okay, yeah. What up, Eric? I got into Maine for the long haul, but haven't seen too much to celebrate. Can you give me an analysis? Yeah. Hey, what up, Eric? Main Street Capital. Actually, I used to own them, but I don't own them anymore. But this, out of all the, oh yeah, we got to look at Webull. Out of all the BDCs out there, this is one of my more favorite ones. So if you're wondering what is a BDC, it's a business development company. They basically just do loans to small and medium-sized businesses, first lien loans, second lien loans, private equity. I like Main Street Capital specifically because unlike all the other BDCs, they take stakes and preferred share equity into the companies they give loans to, so they can capture some of the upside. But check this out. This is one I like because you get a 7.2% dividend and they pay you monthly. They literally pay you monthly dividends. So that's what people like about them. I do not expect this to outperform the market in the long run, but they have a sustainable 7% yield. And as we go into a higher or a lower rate environment, that should actually technically hurt them a little bit. So let's look at Webull stock. And wait, Webull may be better than Moomoo. Hey, speaking of Webull right here, I actually own, I've looked at Webull stock, I own Robinhood stock, and I own Moomoo stock. So remember that app we were just looking at, this app right here, Moomoo? I also own Moomoo stock as well. I own Robinhood stock. They've been two of my better performers. And here's this is my Webull portfolio right here. So hey, speaking of Webull stock, I've probably given them a lot of transaction fees and stuff like that. So let me pull up Webull stock right here. They've just been really underperforming their competitors because they don't get that high margin crypto transaction fees, but they literally just now introduced crypto back to Webull. So that's going to be another big earnings tailwind, I think, for them. If we go to the revenue is up 46% year over year. I think it's going to continue to grow at this insane rate with the new, with them adding crypto back to the app now. But yeah, they're not making any money right now. But I like that growth about them. I would honestly much rather buy Moomoo stock, which is FUTU. So we just looked at Webull. But here's Moomoo stock, or the brokerage I'm on right now. This one's insane. Their growth is also, it's actually better. Actually, Futu is a better brokerage or a better buy, I think, than Robinhood and Webull stock. And they're the exact same thing in the exact same industry, brokerage commissions. So check this out. If we look at the revenue's up 69. And the net income's up 111. I kid you not. They have 50% net margins. beating on expectations. This app also introduced crypto about a year ago, and that goes under this revenue. So that's why they're seeing triple-digit growth the past 3 quarters on that business. Brokerages make a lot of money from interest income. So if you look at this, yeah, it's up 43%. What that is if you look in the middle of my screen right here, I have $615 of cash, and for free, they literally give you a 3.85% APY. Why do they do that? Because they also make a slight bit more on top of that and pocket the difference. So they earn like a 4.2% yield, and they just give you 3.85% of it. So by the way, this is a free brokerage, doesn't cost anything. And if you want to get it, it's in the link tree in my bio, first link there. But yeah. All right, let's see here. Novo Nordisk, please. Ooh, Novo Nordisk is a great, well, I don't know about great, but this is your weight loss prescription play. They actually own Ozempic. You know, Elon Musk is on Ozempic, but yeah, they own Ozempic and Wegovy. And if you go to where the revenue comes from, 93% of all the revenue literally just comes from their diabetes and obesity care products. So it's a pure weight loss prescription play. They're making great net income right now. Look at this, easily $4 billion plus in net income a quarter. But the reason, if we go to their multiple right here, the PE is so much lower than the industry averages because they actually lose their exclusivity for Ozempic in a couple years. So, and they're just seeing increased competition from Eli Lilly. But yeah, they lose their exclusivity for Ozempic. And I actually read that in the Morningstar research down here. So yeah, what's cool is you can read the Morningstar research. They have like, what did the bulls say about the stock? What did the bears say? Then they tell you about the moat and stuff like that. Anyway, that's cool. Honestly, I think they're worth nibbling, but I wouldn't have it as a huge size position. They're seeing a lot of increased competition from Zepbound by Eli Lilly. Yeah, hey, what up, I2? Yeah, by the way, if you want to get this brokerage I'm on, it's where you buy stocks on. It's in the link tree in my bio, very first link there. It is an affiliate link too, full disclosure. So if you deposit $100, we'll both get some free stocks. But let's see, Captain America, no way. He said Intel stock. Yo, so Intel, the sentiment has changed for this company because the US government took a stake in Intel, and also now NVIDIA has taken a stake in Intel. Chinese authorities raised security concerns over Intel products. Well, here's the thing right now. Basically, the government took a stake in Intel. The government can't allow this company to go bankrupt right now because we need their manufacturing abilities in the US. We need to be manufacturing independent. If you don't know, right now, NVIDIA designs their chips and they're actually all manufactured in Taiwan, a little bit in Phoenix now, or their first chip, actually their first ever Blackwell chip ever was just produced literally this week in Arizona for the first time. So they are making great progress, the Taiwan Semi. But basically, NVIDIA is now moving some of their manufacturing of their older chips, their older CPUs to Intel in the US. And also there's some rumors about Apple taking a 5% stake into them as well, because Apple promised to invest $200 billion or $300 billion in the US. And part of the way they could do that is buy some Intel stock. I think the regulators would be okay with it. So anyway, yeah, the government can't allow them to go bankrupt. Would I buy them here though? Probably not. I wouldn't have it as a huge size position. What up, Carlos? He said CPRT. That is Copart. Ooh, not doing too great. The stock is kind of been trending down recently, but let's go check out what they're doing. So $42 billion company. They're trading at a fair valuation, 27 times PE. Where's the revenue come from? Most of it from the US. They're making great money, actually. Check that out. This is after-tax net income, basically 400 mil a quarter. Well, so that actually might be why the stock is... The growth is slowing down, like mid-single digit revenue growth, like 5-7% growth. But look at that balance sheet. Whoa. How much cash they got? They have $5 billion of cash and no debt. What was the market cap again? 42 billion. So literally over 10%. Well, actually pretty much exactly 10% of the entire company of what you're paying is just their cash on hand. Let's see, are they making interest on their cash? Because they have $5 billion of cash and no debt. They, 49 million of interest. That's what, $5 billion of cash gets you right now, 50 million of interest every 3 months. And that goes straight to the bottom line. Actually, here's how we can verify that. Well, it doesn't matter. Anyway, PEs, honestly, I like them. Maybe they're just being out innovated right now. Maybe there's some news I don't know. Are they missing on expectations? Yeah, look at that. So analysts expected the orange lines, but the analysts expect, look at that. They missed on revenue this quarter and they missed on revenue last quarter. So 2 misses. All right. Vom, hey, what up, man? He said, what platform is this? Yeah, if you're on the YouTube stream, it's actually in the link in the description if you want to get this app I'm on. So yeah, by the way, this is a brokerage. If you want to get it, it's in the link tree in my bio, the very first link there. But yeah, if you're on YouTube, it's in the link in the description. Just a brokerage called Moomoo. You can just type it into Google. But yeah, they ask you for a bunch of information. It's where you buy stocks on. Okay, Let's see. Remind me to get to Axon. I do want to get to Axon. UiPath. You know what? UiPath. I'm actually down bad on that one. It's actually one of my biggest losers, matter of fact. But one reason why UiPath has been rallying up so much is because they have a new partnership with Google Gemini, with Snowflake, and with OpenAI, and with NVIDIA. So they have a bunch of new partnerships. But I've always just I'll show you my position first to give you real context here. This position is just like too cheap to sell. I've had some losers before that it's worth taking the loss on, but I always found UiPath and Zoom, they're too cheap to take the full loss on. So I've just been chilling on my shares. I'm kind of actively trying to get out of this one. If you're wondering what happened way back here, the CEO quit out of nowhere, pretty much cash grab, looked terrible. They really don't. I don't know if they have a moat at all. That's the thing. I don't really know if they have anything exclusive. I mean, you could pull up the Morningstar research on this. Oh well, but I don't know about them. Okay. Hey, Oklo is pure trash, but the momentum is real on that one. Yeah. Intel is huge in my AZ community. We mess in my city if they fail. Yeah, a lot of jobs probably. So let's look at P&G Kraken Robotics. Oh, this one. Wow, look at that. It's at an all-time high. It's actually a Canadian company. So Canadian robotics company. Let's go look at their numbers right here. So products. They actually have some revenue. That's good, but the growth numbers are a bit choppy. It was up 17% this quarter, but last quarter it fell 27, then it fell 7, then it fell 4. So numbers are a little choppy. They are technically making money. Well, this is before tax. The before tax number was 500K. Anyway, I know a lot of the robotics names have been on fire recently. So yeah, it looks like some Canadian company supplies sonar and optical sensors, batteries, and underwater robotics equipment. Huh. There you go. Kraken Robotics. Okay. Oh, geez. Was TNMD. TNMD. This is, I don't think this is what you're talking about. Wait. Oh, I typed it in wrong. TNDM. Wait. TNDM. This is Tandem Diabetes Care. So this is a very low market cap. They're worth $900 million. Yikes. They're the same prices they were in 2017. So you bought the stock, well, let's go look at their numbers. So supplier, that revenue is actually up 13% year over year. That's great news. Their pump revenue, that is up 3%. So both businesses are growing. They met on expectations. So revenue's up 9%. And it's these net income. Oh, so that's the thing. Remember, this whole company was worth exactly $990 million. So you buy the company for $990 million, and they lost $50 million, and then $130 million. $100 million is 10% of the market cap. So that we really want to see them narrow their losses at a much faster rate. They also, yikes, they have some leverage. They have a bit of liabilities. They've leveraged up year over year because of their losses. I'd be a slight bit careful with this name. I can see why they're doing bad. I like the growth. Like, the growth is good, but those net income losses, like, there might even be some like real bankruptcy risk there. That might be why it's struggling. So OUST, let's check it out. What do you think about Pfizer? Oh, we'll look at Pfizer after this. And OCG Silver, HRO. We'll get to all of these. Don't worry. So, all right. UPS. What up, Dot? Maybe we'll look at UPS. They're kind of seen as a dividend trap right now. But here's Ouster stock. Let's see what they do. Sale and production of LiDAR sensor kits. And they've been growing very nicely. Waymo's a LiDAR sensor company. But yeah, the revenue's up 30% after it grew 123. So they're on a streak of growth right now. Yeah, revenue's up 29 after it grew 39, after it grew 90. And the analysts are expecting it to continue to climb higher. Look at that, 40 mil in 2 quarters. Are they probably not making money? Yeah, so they're losing 20 mil a quarter. But look, these are green year-over-year growth rates. They're narrowing their losses. They just beefed up their balance sheet, from issuing shares. But honestly, as long as they can keep up this growth, I like this name. LiDAR is a popular industry right now. Yeah. Okay, so Pfizer stock, this one is is interesting because you're mainly buying this for the dividend. Again, if you are 10 years away from retirement, it's not a stock you'd want to touch. If we look at Pfizer is literally the same price that it was back in 1998. So you bought the stock, 25 years or 30 years ago, you are down on your position. But why analysts like this one is because of the yield. You get a 7% dividend with Pfizer stock, and it's actually sustainable. It wasn't sustainable for a while before today, but it's finally sustainable again, and based off their own guidance, it is. But check this out. The numbers used to be choppy. Sometimes they lost a couple billion a quarter. But look at this. They made $2.93 billion in net income this quarter. So they made $2.93 billion of net income, and the dividend cost $2.45 billion. So as long as they make over $2.45 billion, they can afford the dividend, and they made $3 billion this quarter. So they actually had a good couple $100 million of leftover money. And this $2.93 billion of net income equals 51 cents of EPS, and analysts are expecting him to basically stay at that 40 to 50 cents of EPS a quarter from now on. What app is this? Hey, by the way, this is actually a software where you get stocks on. If you want to get it, it's in the link tree in my bio, very first link there. They ask you for a bunch of information. Full disclosure, it is an affiliate link, so if you go and deposit $100, we'll both get some free stocks. But if you're looking to buy stocks, this is, I have all these other platform or brokerages to buy stocks on too. But if you're looking for a great app to buy stocks on, this is my favorite one right here. Lowest fee, free brokerage. Okay, so hey, what up? Marcus said PayPal. Yeah, what up, Isaiah? PayPal stock. Yeah, this one has been struggling for a long time. So they're actually, if we scroll up to the month here, PayPal's the same price that it was back in 2018. So the stock has kind of been flat for a while. But here's why this stock has been flat for a while. They're a bit of a slow grower. If you look at their year-over-year growth rates on the revenue, the lifeblood of the company, the sales, it's single digits. TikTok said your stream is no longer eligible for recommendation. Well, oh well. Hey, by the way, best way to support me is subscribe to my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio. But yeah, YouTube channel is called Nathan Robert. I'm also streaming on there. Yeah. Okay. Anyway, if we go to PayPal right here, single digit, like 5% revenue growth. Last quarter, it was only up 1.1. So the growth that doesn't really beat inflation. But the good news is about PayPal is that they're doing insane share buybacks right now. If we go to their share buyback program, PayPal's literally spending $1 to $1.5 billion solely buying back their own shares every quarter. So if we go to the net income grew by 11.8. So the net income's up by 11.8. But the net income per share is up by 19. Again, the net income growth and the net income per share growth should always be the same. The only thing that changes is the share part of the ratio. So there's 8% less shares. So anyway, pretty cool for PayPal, the share buybacks. But again, I would honestly rather have PayPal done some M&A. They own Venmo, they own Honey. Yikes, the cash from operations is down 41% year over year. I wonder what happened there. But anyway, I kind of want to see them do some M&A, buy a company. That'd be interesting. So let's see here, OCG Silver, and then we'll look at HROW. Here's Oriental Culture stock. We don't really cover these kind of stocks. If you look in the very top right, they're only worth $70 million, just not companies we cover. It's like a flip of a coin, basically. It is a Chinese company. Do they have sales? They have no sales. Yeah, we're not going to cover that one. Good luck with that one, but it's some pure speculative company. But I hope you do good on that one. HROW stock. So this is Haro. I've actually not heard of this company before. They've done very well, though. Check it out. Congrats if you own this name. You're probably up on your position. Let's see here. All the revenue comes from the U.S. Branded Imprismus RX. So this is some healthcare company. Yeah. Oh, it's actually in this industry. I can't cover this industry. Whoa. But let's go look at their numbers. Are they profitable? Let's hope. So the revenue's grown nicely. Check that out. Revenue's up 30, and they actually made net income. This is real. They really made $5 million in net income this quarter. That is great news. They used to lose consistent net income, but now they're actually looking a bit more consistent. Actually, I love that. I love that. Let me check out the EPS expectations. Yeah, the analysts are expecting them to stay net income positive for the rest of the time. So that's good news. Yeah. All right. So yeah, there's HRO. No dividend. Are they doing share buybacks though? 177. No, so you've been diluted slightly. But anyway, they're interesting. Let's hope they can stay net income positive, and the analysts are expecting them to stay net income positive. Pretty cool. Please. Oh yeah, hey, we just looked at this one, so I won't really. This is just a uranium momentum play. Basically, the U.S. Is starting to source our uranium now from the U.S. and Canada. We're no longer buying uranium from Russia and in China. So yeah, this is one of the better uranium plays because if we go to their balance sheet, they have a fortress balance sheet. They literally have $200 million of cash, which earned them 1.3 million of interest this quarter. But they're still losing, 20 mil a quarter, but they can afford it right now. I that's just one of the uranium plays. There's also just ticker symbol URA. It just is all the uranium plays just in an ETF right here. So if you don't know which uranium stock to maybe buy individually, maybe check out the URA ETF. I will say my favorite uranium stock of all time, like probably better than that one, is ticker symbol CCO Cameco. So if you're going to buy uranium stock at all-time highs, check out this one. What can you not cover? Certain sectors. Every time I talk about certain sectors on TikTok, they take down the stream. And it's happened so many times, so I just don't cover certain sectors anymore. Like the drink, the leaf industry, the pew industry. We just can't cover those, and certain other ones. But let's keep going here. What's on your watch list? Well, hey, I kind of got a lot of stuff on my watch list. I have like my hidden gem watch list right here. I love all of these stocks in here. All of these I'd happily just never sell. Oh, I forgot to get to Axon too. You know what? Axon's in here. They own D-Drone, best drone defense play by far. They have like real customers. So check this out. Here's Axon right here. That's part of their business. They're also a body cam and cloud business. So basically like the whole UK police force uses Axon body cams and they upload it all to the Axon cloud and they collect that money. So Axon's just a beast of a growth company, and I do own one share of them, but they are bare. The net income is the net income. The net income multiple is super expensive, is what I'm trying to say. The PE ratio is at 165. And that's real. So really expensive, like more expensive than Palantir, but I do own one share just because I love the company so much. Just talk about high quality. All right. Can MITSF? Well, hopefully I can find this one. Let's see. Yeah, hey, that I can't view that stock on this brokerage. What up, cool? Neo said OPTT stock, Ocean Power Technology. Yeah, hey, this is a $90 million micro cap at all-time lows. Dang, since of all the reverse splits, it used to be a $5,000 stock. But yeah, let's see if we can figure out why they're at all-time lows. So yeah, they have no sales, revenue of $1 million, and it's down 10%. And they're losing, 7 mil a quarter. When the whole company is worth 90 million, whenever you lose 6 million, like that, it's devastating. Be really careful. Your mom wants me. Hey, what up? Said, what brokerage are you using? Yeah, hey, by the way, if you want to get this brokerage I'm on, it's in the link tree in my bio, very first link there. Brokerage called Moomoo. It is an affiliate link too, full disclosure. So if you go and deposit $100, we'll both get some free stocks. AMPX right here. AMPX. Empress Technology. Hey, this one's actually on my watch list. Let's check it out right here. Then we'll look at HOND, HOND. OCG Silver, not the one. Well, hey, maybe we'll get to that one, Mars. Sorry, my bad. So here we go. Here's Empress Technology right here. So there must have been something that impressed me. This is a battery business. The U.S. is only 34% of the revenue. So that's are they headquartered in the U.S.? Let me see. Yep, in California. Let's see here. Do they have sales? They do. Check that out. That's great growth. The revenue went from 3 mil to 15 mil. That's some great growth of the revenue. What are the analysts expecting? So revenue was 15 mil. Yeah, it's expected to go to 20 mil in 2 quarters. They beat on revenue expectations every quarter. The AMPX looks like a nice, interesting growth story. Are they probably overvalued here? Probably. But it's really just pricing in the future growth. It just looks like a nice growthy company. So we just want to see them keep up the growth of the sales. Can you show us how to read the income tab in Moomoo? Yeah, hey, Magic Dude, I also have a YouTube video on how on going over all the financial metrics. So if you go to the link tree in my bio, like the 7th link there, like a YouTube video on how to use this app and analyze stocks. Like, let's go analyze waste management in here. Then we'll get to HON. Oh, Kroger stock. What up, MK? Good to see you. So AMPX does high-density lithium-ion batteries. It sells them to drone manufacturers. Oh, Jeffrey, hey, thanks for that. I really appreciate that. So yeah, that was for that last stock we were looking at, AMPX. Thanks for that. Yeah, hey, we'll look at some of those other stocks in a minute here. So here's waste management. Talk about a stock that AI can't come for. Like we're always going to need, to throw away trash, and Americans are very wasteful. So if we look at the dividend right here, 1.5% dividend. I mean, like businesses have to throw away their trash, like by law. I mean, yeah. So this business model is great as long as they don't raise their prices too much. The government's, going to be okay with it. But the growth is good. I mean, the sales are up 19% on waste management. After growing, normally they're a low single digit grower, but 19 is very good. Did they like buy something? Oh, they 2 quarters ago they bought something for $7 billion. Also, Bill Gates sees something in this. The Bill and Melinda Gates Foundation owns 8% of the company. But yeah, waste management just makes good net income. Easily look at that, 500 to 700 mil of net income a quarter. I'm actually going to add them back to the top of the watch list just because I do want exposure to waste management eventually. They're like that good. They're that high quality. Like they're like McDonald's, just super high quality. What happens is, yeah, hey, by the way, if you want to get this brokerage I'm on, it's in the link tree in my bio, very first link there. Let's see. Oh, hey, that's the company that NVIDIA owns. Another cool feature about this app is you can see all the like super investor portfolios, like the Pelosi tracker. These are just super investors. They have to make all their trades public by SEC law. And on this app, you can like view it and you can like batch trade, follow them into it. But one of the ones we get in here is the NVIDIA portfolio. And yep, NVIDIA does own APLD. So they own a bunch of CoreWeave, but APLD is their second largest holding. And here's, in my opinion, why APLD is doing so good. They just reported earnings and they deserve to gap up so much in earnings because the earnings were that good. Check this out right here. If you're wondering why a stock either does really good or really bad on earnings day, it's usually simple. Did they beat or miss on expectations? And as we can see, there was a huge beat. The revenue expected was 45 mil. They reported 64 mil. And if we go to the net income, they were expected to lose 13 cents of net income, but they made 7 cents of EPS. I mean, talk about a great quarter. This is your data center hosting company. I know they've been through a lot of partnerships recently. Anyway, yeah, there's APLD, probably a bit overvalued here, but let's look at HOND now. Yeah, HOND stock. So then we'll look to Kroger. Oh, Kroger, Warren Buffett just bought some of that company. VHF or IYG. Oh, hey, there was some ETF I talked about in the Discord. Okay, this company is like a blank check company. They just acquired it was either some sort of crypto or quantum asset. I don't know. So yeah, they're a blank check company. What that means is they can just buy businesses. Here's their website right here. Let's see. What did they just acquire? Like, I don't even know. Fintech, payment. I mean, they just own some assets, and I don't know what they just bought, but I'm pretty sure it's some sort of like either quantum, it's just some sort of momentum name. And here, if we go to their numbers, because there's no data really, but yeah, if we go to the revenue, it says no data because they've never sold anything, but we can see how the assets just kind of transformed from like 300K to 230 mil. Anywho, I wish I'd give you more thoughts on them. My apologies. So Kroger stock, that one's actually owned by the homie Warren Buffett. Speaking of the Buffett portfolio, we go to his most recent changes in here. We can just see his entire portfolio down here. Let's type in Kroger. Oh my goodness, KR. Is it really going to autocorrect me every time? Okay. There's Kroger. Yeah, he owns 50 million of Kroger stock. You know what? This is just a nice, here's his whole portfolio. Apple. He has a lot of higher yielding names. Bank of America, Coca-Cola, Chevron. So yeah. But Kroger stock is a nice dividend growth company as well. If we go to their dividend, check this out. You get a 1.9% dividend. And look at how every year they raise the dividend. So, yeah, hey, Catherine, if you go to the link tree in my bio, I'm looking at it right now. If you go to the 7th link there, it's a video that says how to use Moomoo. Full tutorial. So yeah, if you want to learn how to use this brokerage, this app I'm on, I have a video. I've linked it on the 7th link in the link tree in my bio, but you can also just type into YouTube, Nathan Robert. I'm also streaming on there too. If you want to watch the stream from YouTube, I'd really appreciate that. But yeah, if we go to Kroger right here, they're making good net. The very low margin business. First off, look at this, 1.8, 1.9% net margins. But yeah, that's how their revenue is. They did 33 billion of revenue and retained 600 million of net income because it's such a low margin industry. But still, they're doing 600 to 800 million of net income a quarter. And if we go to the share buybacks, or the dividends too. The dividend costs 200 mil a quarter, so they have a lot of room to raise the dividend. Since they have so much room to raise the dividend, they're actually doing share buybacks. They spent 5 billion that one quarter on share buybacks, mostly because they were trying to acquire Albertsons and they couldn't acquire Albertsons, so they just used the cash to buy stock. But look, here's what the share buybacks do for you. If we go to the net income, it's up by 31. So net income grew by 31, but net income per share grew by 42. I've never seen this. They bought back 10% of the whole company. Again, it was $5 billion. The whole company's worth $45 billion. Well, it was worth a lot less at the time, but just insane. VFH. Let's check it out. Vanguard Financials ETF. Yeah, check this out right here. What's the expense ratio? Yeah, a 0.09% expense ratio, and you get exposure to the market cap weighted fintechs. JP Morgan, Berkshire Hathaway, MasterCard, BofA, Visa, Wells Fargo. So I love this actually. If you're looking for a financial ETF or just want exposure to that sector, you can buy that ETF. Pretty cool. So Hond is going to merge with Terrestrial Energy. It's an energy company like Oklo. Oh, really, Johnny? Hey, thanks for that. I appreciate that. Love your content. Great vibes. Oh, hey, thanks, Barely. I appreciate that. Hey, yeah, by the way, if y'all want to hit the follow button, we stream every single day. I sell nothing. I have no course, book, WhatsApp, Telegram. I'll never follow you, DM you. Please watch out for people impersonating me. Can you give me a preview to Buffett's portfolio? Find it curious. Oh, yeah, here's Buffett's portfolio again. His largest holding is Apple, and then, American Express, Bank of America, Coca-Cola, Chevron, Moody's, Oxy, a lot of the higher yielding names. And we can see his performance. But anyway, yeah, there's Nancy Pelosi's portfolio. Notice Nancy Pelosi's largest holding is Apple. Buffett's largest holding, Apple. So Apple is you need to own the S&P 500 or own some of the Mag 7 individually. Let's see here. Let's look at Astera Labs, and then we'll look at Coca-Cola or Pepsi. We'll look at that debate. So yeah, here's Astera Labs. The reason they fell on Friday is because they actually partnered with ARM. They partnered with ARM, and for some reason, analysts are seeing this as a win-lose, where ARM wins, but Astera Lab loses somehow. I'm still looking into that, but that's the reason they gapped down so much. But before that news ever dropped, I love this company's numbers. I mean, this is great news. If we go to the revenue right here, the revenue's up insane. It's up 149% after it grew 600%. I mean, literally in 2023, they did 10 mil of revenue a quarter. Now it's 190 million. And out of this 190 million of revenue, they made 51 million of after-tax net income. I mean, talk about beast. And also, the balance sheet here, this is a fortress of a balance sheet. I can't believe it. They literally have $1 billion of cash up from 830 million and no debt. And that $1 billion of cash is earning them 10 mil of interest a quarter. I mean, that's how, actually, if you look at the operating profit was 39 million, but then this does not include the interest income that they collected. So when we go to the net income, this is 39 mil. This was 51 mil because it includes the interest. Pretty cool. He just sold Apple, invested in Domino's. He sold 0.5% of his Apple. Yeah. You should never buy stocks, someone said. Hey, I don't know. Actually, I don't think so. If you look at the top left, actually, someone said you should never buy stocks. Well, in this portfolio in the top left, this is called my buy and never sell portfolio. Someone says you should never buy stocks. Well, I'll just say this. The S&P 500 on average, again, investing in stocks isn't get rich quick. It's to preserve and slowly build your wealth. The S&P 500 CAGRs at 8% a year. For lately, 10 to 12%. So you have an asset that provably returns 7 to 8% a year. It beats inflation. I love stocks. So the goal is to invest $100 and it goes to 108. And then from 108 to 120, then 120, 100, it's a snowball effect. Okay, so George said PL stock. I think that was Planet Labs. Where are they headquartered? Let me check this out, actually. Let's see. So they're headquartered in California. They're an aerospace and defense name. It says the industry chain is a drone. So this looks like a drone play. And I know the drone stocks have had some fire momentum lately. Look at the momentum on that one. Yeah, let's see their sales, though. 40% of the revenue comes from the US. Whoa. Actually, this stock isn't just rallying because of momentum. They are beating like crazy on expectations. Check that out. The revenue was 66 mil. The analysts expected them to do 66 mil. They reported 74. I mean, the past 2 quarters have had some insane beats. They're losing less net income than expected as well. Let's see revenue. So no wonder the stock is doing so well and gapping up specifically on earnings day. Yeah, they gapped up boom on earnings because their actual earnings are so good. So, yeah, they're pretty interesting actually. All right. Do you recommend buying penny stocks? Not really. No. I recommend just buying high quality stocks with good fundamentals that you can actually trust for the long run. Here's some of the stocks that I've. This is just one of my portfolios. And some of these I basically never sell stocks in here, but buy companies you love and use and do some research on them. But like Meta, Google, McDonald's, Constellation Energy, I own Amazon, I own Coca-Cola, I own Ferrari, Comfort Systems, like companies you use, actually like buy them if you like their numbers. And I'm totally biased, but I own Meta, Google, a lot of the S&P 500. Actually, every stock in here is in the every stock in this portfolio is in the S&P 500. We also have a Webull account. We also have a lot of stocks. And we have too many stocks. I'll say that. I love picking stocks. I'm an individual stock picker. But luckily, there is something called diversification, where if you own too many stocks, you eventually just do exactly what the market does. And it kind of just defeats the whole purpose. But not for me, because all of our portfolios individually have all outperformed the S&P 500. Someone said Coke stock is a joke. Well, hey, Ludwig, I think you're thinking of Coca-Cola stock. If you look right here in the middle, someone said Coca-Cola or Coke stock is a joke. Well, if the joke is that it's an insanely good performer, then that's the joke, because this is Coca-Cola Consolidated. This is actually the bottling company. It's way different from the normal Coca-Cola stock that actually, let me overlay normal Coca-Cola stock over this. And actually, Buffett owns a lot of normal Coca-Cola, and I do actually like Coca-Cola too. Yeah, there's normal Coke stock at the bottom. But yeah, let me actually just go over the other one that Buffett owns. So here's Buffett's portfolio. Someone asked me earlier, Coca-Cola or Pepsi. Let's just go over Coca-Cola. Actually, the answer to that, I'd also pick Coca-Cola stock over Pepsi if I had to pick one just for the long run forever. Because Coca-Cola has this high margin like syrup. Okay, but here is this company right here. You're mainly buying it for the dividend. Check this out. You get a 2.91% dividend. Call it a 3% dividend. So you get a 3% dividend with the stock, and then you're just hoping for like 3% stock price appreciation. Again, I don't expect Coca-Cola to outperform the tech-heavy S&P 500, but you should hopefully get 6 to 7% of your money back a year, and they're somewhat recession resilient. All right. What app is this? Yeah, hey, Bogdan. What up, dude? Yeah, by the way, this is a software. It's a brokerage where you buy stocks on. If you want to get it, it's in the link tree in my bio, very first link there. Or you can just type it into Google. It's just a brokerage called Moomoo. But yeah, it's in the link tree in my bio, first link there. And it is an affiliate link, full disclosure. So if you go and deposit $100, we'll both get like some free stocks. Should I buy the dip of Spider Gold Trust? No, hey, actually, Matthew, good question. So you're thinking of GLD right here. So look, this is the Spider Gold ETF right here. And if we look at the expense ratio here, it's a 0.4% expense ratio. So that's a pretty high fee. Notice it's already kind of revealed it. I have another stock overlaying this stock right here. So here's kind of your not financial advice. The thing you should do. You should move your money from GLD to ticker symbol IAU. Again, it's the exact same ETF. It moves exactly the same with the commodity of gold, but with a 0.15% lower expense ratio fee. So for every 1,000 you put in, you're saving $15 a year in expense ratio fees. And it's run by BlackRock. So I like that one more. And that's the gold ETF. I don't know if I'd buy the dip on gold right now either. Yeah, hey, I like that, Looney. Get rich slowly. Exactly. So Hans said SoFi. Let's do SoFi. I haven't looked at them in a long time. And then we'll look at Navitas. We'll try and get to, we'll do Alibaba. What up, OP? Greetings from Europe. Hey, what up, Tom? Good to see you. Hope everyone's having a great Sunday. By the way, we're going to be streaming in exactly 7 hours from now. We stream sometimes twice a day. We're going to be streaming later today in exactly 7 hours. And if you want to hit the follow button, also, I sell nothing. I have no course, book, WhatsApp, Telegram. I'll never follow you, DM you. Watch out for people impersonating me. But here's SoFi right here, another stock that I do own. I might be biased, but hey, what up, Caden? Good to see you. But SoFi, they have the student loan businesses, which is actually doing good right now. But the main growth part, the main reason SoFi, in my opinion, deserves to be doing this well is because of how growthy their financial services are. Check out this growth. The revenue's up 105, after it grew 80, after it grew 220, after it grew 260. Like, they're on a streak. Like, no analyst expected that. We can actually see the analyst expectation that's down here. That's the orange line. And every quarter, they're constantly beating on revenue. Every quarter, they're beating on EPS, which is net income. And every quarter, they're beating on EBITDA. And by a wide margin, too. They expected 84, 125. That's a big beat. So No wonder they're gapping up so much on earnings. People are really taking SoFi serious. The revenue's up 42. Look at that. The revenue is 850 mil. Out of this 850 mil of revenue, 97 million of it was after tax net income. So I really think people are taking SoFi serious. I love them. So, Credo Technologies. Let's see you cover that one. What up, man? So Credo Technologies, yeah, CRDO. This one kind of reminds me of Astera Labs. We'll look at AliExpress after this. So here's Credo Technology. Again, another company kind of like SoFi that isn't just propped up on momentum right now. Their fundamentals justify this insane stock price appreciation. Again, here's the analyst expectations. Every quarter, huge beat on revenue, double on net income, huge beat on EBITDA. So these are just good numbers. And the numbers always explain why a stock is either doing really good or really bad. You know, the reason Lucid is a zero or is at all-time lows is because their numbers are trash. The reason Beyond Meat's a zero is because their numbers are trash. The reason Palantir, AppLovin, and Creative Technologies are doing good because their numbers are good. So that's why on the stream, we always really focus on the numbers because, yeah, there's the short-term, momentum and feelings and emotional, but numbers always outshine in the long run. So anyway, if we look at these numbers right here, the revenue is so growth, dude. The revenue went from 59 mil to 223 mil. And they're not just growing their revenue, but also their net income. Check that out. 63 mil of net income this quarter. At this growth rate, what's the EPS like going to be the same time next year? And look at this absolute monster of a balance sheet. They literally have no debt, $500 million of cash piles growing. So Credo Technologies absolutely deserves to be doing this well. Probably a little overvalued here, but again, they deserve to do it. Okay, so let's see. Baba stock. This is your basically Chinese Amazon play. They're not so much like Amazon because Amazon's like business to consumer. Alibaba's more business to business. People or businesses buy stuff in bulk off AliExpress to sell on their e-commerce website or whatever, on Shopify, whatever. So AliExpress right here, let's see how they're doing. By the way, we've converted the currency from Chinese yuan to USD just so we can get a better idea. This is an ADR, so you got to pay that yearly ADR fee because they're Chinese. But look at this right here. They're easily making like 4 to 5 billion of net income every quarter. So that's how they just started paying a dividend. Since they have so much leftover money now, they pay 13% of the net income they make to dividends. Yeah, Alibaba, China e-commerce group. Anyway, yeah. They're at a low valuation, but this will always trade at a low valuation. One cool thing about Alibaba as well is that they're now expanding. Alibaba launches Aegeon system, reducing GPU usage by 82% for AI models. Hey, that sounds good, right? I know there was some other thing that Alibaba is going to be making their own GPUs to fill the void that NVIDIA. What website is this? Yeah, hey, will not lose. What up, dude? But yeah, by the way, this is a brokerage where you buy stocks on. It's in the link tree in my bio, very first link there. They ask you for a bunch of information, but yeah. Okay, it's an affiliate link too, full disclosure. Alibaba and AliExpress are the same company. Yeah, Zylan, yes, sir. So BABA is actually AliExpress stock, publicly traded. Yeah, there you go. So, can you explain catching a falling knife? Yeah, you don't want to catch the knife as it's falling. You want the knife to fully fall. So if we look at Lucid right here, yeah, I hear that sometimes. Someone says don't catch a falling knife. Like wait for the knife to hit the floor. Wait for it to completely bottom. Like you want to make sure the thing is fully bottomed. Okay. Shark Ninja. Hey, y'all know like those Ninja blenders, those Ninja ice cream machine makers? Well, they're actually a publicly traded stock. And this actually company impresses me. They just sell a boring commodity, kitchen appliances, whatever, but they actually have great growth, cleaning appliances, food preparation, cooking, beauty and home environment appliances. Well, hey, I wonder what their whole full suite of products look like, but this is great net income right here. That's so impressive, the growth rate of this. I mean, easily 100 mil plus a net income a quarter. So that's great. And they were deleveraging their balance sheet. They're interesting. If you can tell us what stocks would you say to keep or buy for next year? Well, actually, if you look, here's just one stock I just bought. I just bought another share of Amazon. I think if you have the intention, like me, to just never sell the company, it's worth buying right now. I've been buying some other companies. I bought Ferrari stock, my first ever EU company. I bought some shares of Ferrari. MUSA is an oil play. Okay, so let's see here. Yo, Jace, do you mean AppLovin stock? Which one should we look at there? Actually, Yeah, let's do AppLovin right here. So this is a company that just got added into the S&P 500. Now, this is a company, in my opinion, that again deserves all the hype, all the momentum around this name because of how great their numbers are. I kid you not, everything will impress you here. The value, I want exposure to this company. I can't believe the growth rate. So if we go to the revenue right here, the revenue is super growthy. Revenue's up 77. So the revenue's up 77, but the net income is up by 164. But notice what percent of the net income of the revenue it is. Well, why did I word that so weird? Notice the net margin. I can't believe it. If you go spend $100 on this company, $65 of it is after-tax net income for them. And this wasn't some like one-time adjustment. Like that was real 65% net margin. They already had great margins before today, 45, 30 to 40% margins, but 65, that's why they're continuing to climb up higher. That's what I can't believe. And, the net income's at a record, 820 mil of net income. The FCF, which is free cash flows, up 69% also to a new record. Like everything here fundamentally is headed in the right direction. I really like AppLove. And I know there is some like SEC investigation. Like their ads are working so well that the SEC, yeah, look at that. SEC investigating AppLovin's array platform data practices because their ads are just so good. So cool. Yeah, no problem, Jace. I really like that one. Oh, hey, yeah, Catherine, we actually looked at T-Rex yesterday. This is, they sell like, they sell decking products, like wooden deck products. And as you know, this is a super interest rate sensitive sector with real estate. People just don't really spend on their house that much. Or let me actually show you, see exactly. Yeah, so they sell wood alternative deck and railings. Or if I click on their website right here, yeah, I guess here's this is what you're buying. And again, I think as we go into a lower interest rate environment, I think this one will really benefit. Because if we look at their numbers right now, they're not great. Well, it was up 3%. Actually, that's good. It's up 3%. But last quarter was down 9, down 15, down 23. So I think this one will really have a nice tailwind from the lower rate environment. And they're making good net income every quarter. It's obviously down year over year, but down 12. So they actually lost their margins. Whoa. Net margin fell 15%, but I'm actually going to put them on the watch list because honestly, it's mostly priced in. What's the net income multiple? Oh, it's still a little expensive, actually. Another company I like that's very similar to that one is DECK, Decker Outdoor. Oh, wait, not Decker Outdoors. I thought of that company sells decks and I forgot the ticker symbol. I'm not going to remember it. Oh, well, Owens Corning is another cool one. They sell roofing shingles. They own Pink Panther Insulation, kind of another interest rate sensitive one. The home builders are like that too, like D.R. Horton or a Lennar. Okay, what app do you use to invest? Yeah, hey, what up, Juan? If you want to get this brokerage I'm on, by the way, I have all these brokerages here. I got Webull, I have Robinhood. All of these brokerages are all in the link tree in my bio. But this is my favorite one to buy stocks on. It's the lowest fee one, no commissions, no monthly costs, no fees at all. So if you want to get it, it's in the link tree in my bio, very first link there. Yeah, it's a brokerage, so it's where you buy stocks on. Okay, ooh, yo, we can sadly, Tom, we can't cover DKNG just because of the sector it's in. I wish I could. I don't want to take the risk though of getting the stream taken down. But here's Ulta Beauty. This is actually a very cool beauty and cosmetics company. And they've really been taking market share from Estee Lauder. Estee Lauder is now at like 0. Elf Beauty has kind of been seeing a little bit of issues, but Ulta Beauty is one I really like because of their consistent net income. I mean, look at this. Again, the numbers are choppy and declining, and that's why the stock is the same price that it was over a year ago. But I love their share buyback program. So check this out. They're easily doing 250 to 350 million of net income a quarter if you average it out. And what are they doing with basically 250 to 300 mil of net income a quarter? Well, since the stock is so suppressed, they're plowing money into buybacks. 100 mil, 300 mil, 200 mil, 200 mil. So here's what that does for you as a shareholder. So if you go to the net income is only up by 3.2. So the net income's up by 3.2, but the net income per share is up all the way to 9%. Look at this EPS every quarter. Whoa. They're doing like $6 to $8 of EPS a quarter. Anyway, that's one of the better beauty and cosmetic stocks. Again, they haven't been doing too well right now. What happens when a knife falls? It will stab and hurt you. Yep. So, hey, Looney said GLW Corning. You know what's actually pretty incredible is that how similarly GLW and Amphenol stock move together. They're both in that fiber optic cable business. And if we go to the two stocks, they move very similarly. Like whenever they get like, I wish I could zoom in more, but it'd mess up the scale. But anyway, I think you believe me. These stocks move very similarly. I chose Amphenol, but both of these are great picks because of this certain sector right here, the optical communications. Check out the growth here. It's up 40% year over year. And that's what really beat on expectations. The analysts expected 3.8 billion in revenue. They reported over 4 billion in revenue. They beat on net income expectations as well. So that's their optical communications, their display revenue. That actually fell by 11. Specialty materials up by 8. Automotive is down by 4. So honestly, I like Amphenol as a better, more growthy pick. So if we look at this one, the revenue is up 19. The net income is back. Yeah, look at that. Used to be for many years they were barely making like 200 to 300 mil or under 300 mil every quarter. Well, these growth rates, like their actual profits they're making, have really turned around. What are their gross margins doing? Yeah, gross margins are up 23. Anyway, I like them, and I like Amphenol Group. How do you value and decide when to invest in a cyclical business like MUSA? Exactly, that's a good question. When you think it's in the down part of the cycle is when you buy these kind of cyclical plays. And what I've noticed with this one is as oil goes up, this one goes up more. And as oil goes down, this one goes down less. It's mainly, again, what's so cool about this one is they have bought back. No oil and gas stock has been this growthy. Here's the 2019 price. It was because of all the share buybacks, it was 120. Now it's nearly 390. So it's because they have bought back 36% of all the shares just since 1 year, or it's just since 2019, 36% of the entire company. So that's why I like them over I love Exxon, I love Chevron, but I really just think that MUSA financials make it my more favorite one, and their dividend policy. They have a very low dividend. You look at the difference between Exxon and MUSA. They obviously move together because they both kind of follow and rhyme with what the price of oil does. But over the long run, I like MUSA, and they're not exposed to the decline of oil. Like if you go to this company's sales, the revenue's down 8 after it fell 3. So the revenue's down bad, but I like this one I just like them the most. Okay. Hey, what up? All Blackout. What's good, dude? Hope you're having a great Sunday. Fork, what up? He said FTNT. We'll look at Fortinet, a great cybersecurity play, and then we'll look at Reddit. If you look at a lot of the software names like Adobe, Salesforce, a lot of these software names are really getting crushed by AI and the AI thesis. But here's what's so cool. I think Fortinet and cybersecurity is a sector that will always be needed and is really immune from AI. AI is actually going to help hackers get better at hacking, and we're always going to need more and more demand for cybersecurity. So check out the growth and they're a subscription model company. A good chunk of the S&P 500 uses their subscription, and check out the annual growth. This is what I want to see if I'm going to trust a company forever. I mean, that's consistently growing subscription revenue, and they're not just making revenue, but also net income, after-tax net income, easily 400 to 500 mil in net income a quarter. The FCF, which is free cash flow, is also insanely good, basically 500 plus mil a quarter. So FTNT is a great cybersecurity name that's on my watch list. What MUSA do they do? Yeah, just an oil play. They also own some convenience stores. Have anyone seen the MUSA, Murphy USA convenience store? So let's see. Anyway, I forget the exact number of stores. I think it's like 1,500 stores. So any opinion on Reddit? Yo, Reddit is a company I love, and not financial advice. I'd put this one on your guys' watch list. I wouldn't pull the trigger yet. I mean, maybe I'd nibble, but I wouldn't make it a full-size position yet because I'll be shocked. I will be shocked if they go below this gap right here, because this quarter of earnings were so good. They were so good that they gapped up and then continued to climb up for the next 10 days. I could not see a world where they go back to $150. I honestly, if they ever get to $150, it's because something went really wrong. But one thing that just went really wrong is because one reason, actually, if we look at this exact day right here, this exact day Reddit gapped down. I just like saying the bad news too. Hey, I love this company. I'm a shareholder. I have 4 shares. I'm up 102% on my Reddit, and I would just want to give both sides of the story here. But ChatGPT mentioned, so whenever you look someone up at ChatGPT, it shows you like the sources, and the sightings of Reddit being in the sources literally dropped from 32 to like under 9%. So basically, that's the reason the stock fell that much today, because they're not showing as much in, I guess, OpenAI's ChatGPT results. Oh, well, but they had incredible earnings. If we look at this number, that's what the orange line, that's what the analysts expect. They're beating on every metric every quarter. They expected 425. They reported 499. They expected 18 cents of EPS. They doubled that at 45. They tripled the EBITDA expectations. Their ARPU, their average revenue per user, increased by 48% year over year. So it's insane. Like that, like forget the name Reddit, for example. We just judge them off their financials. This is a great company. Revenue's up 77 after it grew 53, after it grew 23. So the growth rate is growing, and they're making net income now. They used to lose money, but now they're making, now they're making great net income every quarter, way much more than the analysts expected. And they have a freaking fortress balance sheet, over $2 billion of cash and no debt at all. Debt-free company. So I'm biased because I own them, but I own them for a reason. Yeah, hey, Joshua. So he said Rich Tech Robotics. Yeah, hey, I've looked into this one. This is a just pure momentum play. They have no real actual like fundamentals, but yeah, if you're just looking for a robotics play to momentum trade, I guess you could do this one. Here, I'll just show you what I mean here. Like if we just go to the revenue right here, like it's just really hard to trust it. What's the market cap on this company? It's a over $1 billion company, so it's $1 billion company. And look at the revenue. I mean, the revenue is down 19% year over year, and the revenue is only $1 million a quarter. And they're losing, a couple mil of net income a quarter. So I just don't see much value in Rich Tech Robotics besides just the momentum around the name. If you're looking for a real robotics company to just buy and never sell, the very best, or I don't know about the very best, but one of my best robotics plays out there, I think, is SYM Symbotics stock right here. This is a warehouse robotics name. They have over 1,500 registered patents and IP. If we go over to the revenue, they actually have real revenue, 400 to 500 mil a quarter. And their actual largest customer is Walmart. Walmart loves them and uses their logistics robots. And Walmart loved them so much that they took a stake. Walmart owns 13.5% of all the shares. Pretty cool. What happens is, yeah, hey, what up, Charles? Yeah, hey, if you want to get this brokerage I'm on, it's in the link tree in my bio, the very first link there. Yeah, this is a software where you buy stocks on. So yeah. Oh, yo. Clem said Marvel, please. Let's do it. MRVL. Owning broad market ETF will be better for most people. Yeah, exactly. Most people, and not even just most people, but most hedge funds can't outperform the S&P 500's 8 to 10% CAGR. And that's why if you can't beat it, you need to at least own some of it in your portfolio, a little bit. What was the drone stock you just showed us? Oh, geez. Drone stock. I don't remember any drone stocks, but we did look at Symbiotic. This was the robotics company that helps out Walmart with their warehouse logistics. Their presentation is so cool. But here's Marvel Technologies right here. This is a chip play that's really cheap right now. Basically, you're waiting for the next quarter, because this quarter they did 22 cents of EPS. But notice next quarter, it's supposed to be $1.40. Like it's supposed to 4x, and then it's supposed to go to 43 cents. So the net income expected next quarter is supposed to be so growthy. Why? Because the growth is back here. Revenue's up 57% this quarter. Last quarter is up 63, 27. So the growth is back and the net income is back. So we're really just seeing what happens. And that's why I remember this one. I remember the day they reported earnings. We were watching it. They gapped down on earnings. I'm like, I would look into this one. I'd maybe nibble on some shares. And they just continue to go higher after earnings. So you're basically just waiting for the next 6 months for their next couple earnings. Yeah, hey, what up, stocks to buy? Is Roblox stock a buy? Not everyone. Let's look at Roblox right here. Oh, yes, Symbiotic and Walmart. Yeah, you're right. So Roblox stock, you know who actually owns Roblox? That is the homie Kathy Wood. Yeah, hey, what up, Anonymous? Yeah, we'll try and get to SNDK. Try and get to that one. But yeah, Kathy Wood's portfolio right here, one of the stocks she owns, I don't see, it's at the top here. It's her third largest holding. So Roblox is actually her third largest Holding. Now, I'm actually not going to recommend this one, but I can see why they've been doing so good, especially in this momentum-y market. But this is a very cool metric that we hope isn't propped up on AI bots. But look at this. Here's their daily active users. This is the most important metric. Their daily active users are 111 million. When this exact same time last year, it was 79 million. So they've just been on a nice growth streak, from 79 to 111 million daily active users. And but the bad news is why I would avoid them is actually because of these net income losses. And it's not really getting any better. The losses worsened by 35%, but they're losing 250 to 300 mil of net income a quarter. And look at this balance sheet. That's rough. They have a lot of debt to pay, a lot of liabilities. Liabilities are nearly the same as assets. So I love the growth there. I love that the revenue's up 20. I love their daily active users growth, but these gap net income losses scare me away. Like they're just still so far away from profitability. And I just don't love profitless companies. But they are interesting. Okay, let's see. SNDK. Let's check it out. So this is SanDisk Corp. Yeah, hey, check that out. Congrats if you own this one. You got to be up on your position. I think this is an EU company, or let me actually check this out. No, wait, no, they're in the US. They're a US listed company. But yeah, oh, this is what I remember. Yeah, look at this. They're a US listed company, but only 19% of the revenue comes from the United States, which is actually okay. I don't mind that. 27% of all the revenue comes from China. 17% comes from Hong Kong. So yeah, good half the revenue is from China, Europe, Middle East. So, but let's go look at their numbers. Revenue is at 1.9 billion. That's actually good. 1.9 billion. But I don't know here. There must be something analysts like, or yeah, look at the expectations. This revenue is expected to continue to hit a new record. They're expected to go $1.50 of EPS just for one quarter. And then, whoa, EBITDA is supposed to triple just in 2 quarters, supposed to double the next quarter. Whoa. So there's just a lot of future growth here that's expected. Anyway, this must be some provision of storage devices, storage-based flash technology. Anyway, that's interesting. What app is this? Yeah, hey, yo, what's up, man? Yeah, if you want to get this brokerage I'm on, it's in the link tree in my bio, very first link there. By the way, this is a brokerage where you buy stocks on. It is an affiliate link too, full disclosure. So if you deposit $100, we'll both get some free stocks. But hey, we'll look at Meta after this. Don't worry. Remind me to get to Meta. But I wanted to get to APLD. What up, Vincent? Said APLD stock. You know who owns APLD? It's the homie NVIDIA. So yeah, their largest holding is CoreWeave, but their second largest holding is APLD. Again, just because NVIDIA owns it doesn't mean you should. You should go do your own research on it. And whenever we go do our own research on APLD, I love their numbers. Here's why specifically they just gapped up on this day. That was the exact day they reported earnings, is because look at their earnings day. Analysts expected 45 mil. They reported 64 mil. That was a huge beat. No wonder they gapped up so much in earnings, and they they lost less net income than expected. I mean, it was a triple beat quarter, so no wonder they gapped up so much. Will not lose said, looks like Webull. Hey, yeah, I do have Webull as well. Look at that. We do have a Webull account. And we have a Robinhood account. That's actually where my Meta is. You know what? Let's actually cover Meta real quick. So here's my Meta position. We have 5 shares of Meta right here. This is actually called my dividend-only portfolio in the top left. So actually every stock in here pays a dividend. And Meta is one I really like that pays a dividend. So check this out right here. Meta, this is... they're in the Mag 7. Oh, this app is telling me that there is a double top. So that's some technical analysis. Anyway, I love the numbers here. We can see their active users. Their daily active users are 3.48 billion. I mean, pretty much half the world is on one of their apps every day. And they're making insane profits. Easily 15 to 20 billion of net income a quarter. They're deleveraging. What app is that? Yeah, hey, by the way, yeah, if you want to get this app I'm on, it's in the link tree in my bio, first link there. It's actually a brokerage. It's where you buy stocks on. But yeah, here's Meta too. Look at that. Only 36% of Meta's revenue comes from the US. So I guess all the international users on Instagram and Facebook are making Meta a lot of money. Has anyone seen the new Meta Ray-Bans? The new Meta, Oakley Ray-Ban collabs. They're so cool. You can scroll through Instagram on the glasses. So that's kind of their way to get exposure to AI, because their LLM is lacking. But they're new. Here's some cool tailwinds. They just introduced ads to WhatsApp, so that's a nice earnings tailwind. And their Threads app, they just created Threads a couple of weeks ago. Their Threads app now has the same amount of daily active users as X does. Right? I'm going to say a year ago. Is that Robinhood app? Well, hey, Robinhood is right here. Yeah, I do have Robinhood. Yeah, all these brokerages, by the way, are all linked in the link tree in my bio. Out of all the brokerages, though, this one that I'm on right now is my favorite one. It's the lowest fee brokerage and the most useful analysis tools that you can get. All the super investor portfolio trackers. This is the app I've been using the whole time to analyze stocks on, just because it's so useful and it's free, no fees or anything. So yeah, if you want to get it, it's in the link tree in my bio. Very first link there. It is an affiliate link too. Full disclosure. So if you go and deposit $100, we'll both get some free stocks. But you don't even have to deposit the $100 or deposit any money to like all these tools I'm seeing right now. It's free. Okay. Anywho, let's keep going here. What is this one? I sold off APLD right before earnings. Yo, that stinks, header. Yeah, we've all been there. We've all been there one way or another. So someone said pay one. What is the ticker symbol for pay one? And we'll check that one out. Oh, and Eaton stock. Yeah, hey, that's that electrical infrastructure company, kind of like a Powell Industries. Hey, thanks, Anonymous. I appreciate that. So yeah, Eaton right here, they have a nice dividend too. You get an over 1% dividend yield with this company. Another cool thing is they're an aerospace play. So if you go to their aerospace business, it's growing very nicely too. It's their first ever $1 billion revenue quarter, up 13%, after grew 12. So hey, that's some nice growth. 60% of the revenue comes from the US. And yeah, they're pretty much making $1 billion of net income every single quarter. So hey, not too shabby. Jose said, dope content. Appreciate the analysis. Yeah, no problem. Yeah, hey, if you guys want to hit the follow button, we stream every single day, sometimes twice a day. We're actually going to be streaming later today as well. So in exactly 7 hours from now, in exactly 7 hours at basically 8 p.m., it's currently 1:15 for me. At 8 p.m., I'm going to be streaming again. And we'll be, because that's when the market opens. At 8 p.m., the stock market opens and we can see how they're doing. And hey, Bowwing, thanks for the gift there. I appreciate that. Hey, what up, Caden? Said him stock. Ooh, Eden, remind me to look at Progressive Corp after that. I love Progressive Corp at this price right here. So here's HIMS. This company, they're going through a lot of, they're going through, yeah, the U.S. administration proposes GLP-1 drug prices reduction to $150 monthly. So if you didn't know, Eli Lilly sells it for $1,000 a month, or I think it is like $500 a month. I don't know where they got the 1,000 number from, but either way, if it's 1,000 or 500, they want to reduce it down to $150 monthly. So that's going to hurt their future margins. But that's the weird part. This company isn't really a weight loss play anymore, because they used to sell Ozempic on their website, but now they no longer sell Ozempic on their website because they lost that partnership. Now they're going to look for some other companies to sell that on, and that's what's going to hurt their future growth. That's what analysts are a little worried about. What's the future growth going to be if they don't sell the weight loss prescription? And that was what led to a lot of this growth right here. So the comps in the future are going to be rough. But for right now, the revenue's great. The revenue's up 72, after grew 52, after grew 88. So they're on a streak right now. And but yeah, they did miss on their growth expectation this quarter. You know, analysts expected 552. They only did 544. So they did miss, but they're making great net income right here. Check that out, like 30 to 50 mil of net income a quarter. So yeah, they're worth looking into, but they're probably still a little overvalued here. Hey, sub to your channel. Hey, Sid, what up, dude? I appreciate that. Thanks so much, dude. Birth rate is so low. Roblox, very risky to hold. Hey, that's an interesting thesis there. What is this one? Paymentus? I can type it in. You know, I'll type it in for you. Here it is. Oh, it's just ticker symbol pay. There it is. So what up, Tom? Ticker symbol pay right here. So $3.67 billion company. Yeah, look at that. They've been like up, down, up, down. Let's go look at their numbers though. Yeah, like, so look at that. They reported good numbers. They rallied up on it, and now they've kind of like sold it all off. So that's weird. Let's see if we can figure out what happened. So yeah, the original numbers were good. They were expecting 260. They reported 280. They beat on net income, and they beat on EBIT. So it really was a triple beat quarter. They triple beat on every metric. They're making great net income every quarter. And this is so growthy. Revenue's up 42 after 48, 50. So growth is good. Balance sheet's really good as well. Yeah, we'll look at NEO after this too. Yeah, the balance sheet is, honestly, I really like this company's numbers. No dividend, that's all right. Yeah, U.S. company. Huh. I wonder why they've been struggling so much recently. Yeah, dang, they're the same prices they were when they IPO'd in 2021. But they're the most growthy they've ever been. Anyway, yeah, I'd actually put them on the watch list. Maybe there's something I don't know there. Maybe they don't have a Mo or something. I don't know. Probably some context I'm missing. So here's the thing with NEO. Yeah, this isn't a good stock. or I wouldn't really trust a lot of money in this name. It's like a, let's see, Neo brand reaches 100,000 vehicle delivery milestone. That's great news. China launches NEV policy. Neo's LiDAR supplier receives Hong Kong approval. Okay, well, anyway, let's go look at their numbers. Here's the thing I just don't like about Neo. If we go to their net income, and again, they're Chinese, so you're paying ADR fee, but we've converted the currency from Chinese yuan to USD just so we can get a better idea. And this company loses, it's a CapEx intensive business. They're losing pretty much $1 billion or 500 million to $1 billion in net income a quarter, and they don't have a good balance sheet as well. If you look at the most recent quarter, their assets went up and their liabilities went down. How is that possible when they lost 700 million? It's because they're diluting you. For the past couple of quarters, they've been issuing a couple billion of stock a quarter. That's how they're able to beef up their balance sheet. But yeah, they're having to dilute you because they can't afford these net income losses. But it looks like they had some new delivery sales that are doing good. Yeah, I can see why they're well off their peak just because they just burn through money. They're kind of like, it's just that whole industry, like even Rivian, Lucid, they all just burn through net income, and it's just a sector I just don't want exposure to. Here's Rivian. Rivian lost $1 billion this quarter, 500 mil last quarter. Like, it's just not too attractive of a sector. Like EV car, like electric vehicles. Like, what's the net margin for that at the end of the day? Like right now, Neo is losing a couple hundred mil a quarter, but even whenever they get profitable, what net margin are you going to sell a commodity electric car at? Right. Anyway, margin. Okay, so Progressive Corp right here. Progressive, this is a great insurance company with great margins. So check this out right here. I actually do own Progressive, full disclosure. We're down bad on them. Check this out. We are down 9% on our Progressive shares. So yeah, but I think they're worth looking into right now. Let's see if the numbers have loaded over here. So they have. They missed on expectations, but these numbers are still great. They're certainly not getting me to sell out of the company or trim. I'm actually looking to buy more because check this out. The revenue still grew 21% year over year to a new record. It's never even been close to 22 bill before. So 22 bill of revenue. And, oh, wait, no, that's last quarter. Actually, okay. This is that we were just looking at Q2's numbers. Here's Q3. So yeah, here's Q3's number. So actually, what was the total revenue? So the revenue, it was 22 bill last quarter. It's 22.5 billion. It still grew 15%. So revenue's growing nicely. Same with net income. Like, I'm not like, in 5 years from now, when we look back in these numbers, like it's just going to look like everyday business as normal. Like anyway, I just like this company's numbers. That's Progressive. They're an insurance company. We can see their main personal lines right here. Check out the growth. I mean, it just literally hits a new record every year, every quarter. So yeah, I do like Progressive Corp. And then you get the yearly special dividend with that company, which is really interesting. Yeah, no problem there, Ron. I appreciate that. Dow said, what's this one? SLNH, data centers and AI. So not Solana, but we got Soluna. Let me turn on my fan. So Luna right here, yeah, the momentum's been very good recently. They're still a very small company. Yeah, if you look in the top right, they're only worth $280 million. So they're worth $280 million, still very tiny, but oh yikes, and they're pretty much at an all-time low. But they're worth $280 million. Yeah, data center hosting business and cryptocurrency mining. That is down 36%. But how's the data center hosting business? That actually is how Iris Energy has been blowing up. They used to be like a Bitcoin mining company, but they've like converted them. It's like a data center hosting business. I don't love these numbers right here. I mean, like just looking at it as I see it, I mean, this isn't great. I mean, the revenue's down 36%. They're losing a couple mil in net income a quarter. You know, when you lose 10 mil a quarter, it's rough when you're only worth 280 mil. So yeah, if you're looking for basically, honestly, what is this company? It looks like a company that just owns a bunch of GPUs. Like, so they just do data center hosting and mine cryptocurrency. Just a company that probably just owns a bunch of GPUs. I don't know. Okay, let's see. What's your thoughts on Hood stock? Yo, that's actually my best performing stock of all time. And also one of my biggest regrets of all time was selling out of Robinhood stock. If you go over back here to our Webull portfolio, we own 5 shares of Robinhood. And we're up 844%. Biggest L. I sold 50 shares of Robinhood at $36 a share. So yeah, we sold out most of our Robinhood at a much lower position, but it made sense for me at the time. We bought the shares shortly after IPO. So here's where I bought my shares. We've been bag holding. And when I was finally up 3x, I'm like, let me just sell most of my position. I was down bad on this position for so long. Bitcoin's at 100,000. Let me just sell most of my position. That was the biggest regret ever. So what I'm trying to say is don't always, here's how the saying goes. It's like, don't trim your flowers and plant weeds with it or something like that. But anyway, here's why Robinhood deserves to be doing this well. They're so growthy, so innovative. If you look at the revenue's up 45%. After it grew 40, after it grew 52. So they're on an absolute streak of growth and not just revenue. So they did 980 mil of revenue. Out of this 980 mil of revenue, 390 million of it was after-tax net income for them. They're printing money. I mean, their net margin was a 39% the most recent quarter. So Robinhood's a beast of a company. They're definitely overvalued right now. They're trading at like 70 times next year's net income, but I still own that company. I'm not going to sell any of my shares ever again. Sold my Oklo at 55. Well, hey, that's actually one I'd recommend to sell out of. Like, no one's going to call you crazy for selling out of this junk. Yeah, the growth has been insane on this one. Let me see here. Yeah, Oklo, here's the crazy part. If we go to the revenue, it says no data because they've never sold anything. Oklo is a startup, no data on the revenue, and they're worth, I can't believe this, $24 billion. Like that they should not be worth 24 bill. But also another one, bro. Hey, we actually just looked at UiPath not that long ago. That's another one I also own, and I am down bad on that one. Check that out. We're down 25% on UiPath. We're down 47% on Zoom. Here, actually, I haven't done this yet. Let me give a quick, I haven't done this basically since the beginning. Let me give you a quick stock portfolio update. And then, by the way, if you want to hit the follow button, we're going to be streaming in exactly 7 hours from now as well at 8 p.m. But yeah, here's my dividend-only portfolio. Every stock in here pays a dividend. And here's us year to date. We're up 17.8% year to date. Look at this April dip. It was the best. Like, as long as you just didn't sell, like, even if you didn't buy anything, as long as you just didn't sell, you're doing amazing. But yeah, here are all the stocks that we own in there. Oh yeah, we have a Roth IRA. I haven't even pulled up my Roth IRA, I think, this whole stream. But yeah, I can't wait to see how the market opens with Delcast Systems. They were up 28% on Friday. But yeah, here are all the stocks that we own in here. Here's my total percent change on every stock in here. So yeah, then of course we just showed our Webull portfolio and then our Moomoo account, which this is known as our buy and never sell portfolio. Basically, once I buy a stock in here, try not to ever sell it. So George said Intel stock, and then after Intel, we'll get to Tencent Music. So that's an interesting one, spun off from Tencent. So then we'll look at ALMU. So yeah, Intel right here, this one, the sentiment is really in their favor because the U.S. just took a huge, like the U.S. government just took a huge stake in it, Intel, and also NVIDIA did. Basically, the U.S. can't allow Intel to go bankrupt. We need their manufacturing capabilities in the U.S., especially because we're poking on everyone to stick with tariffs. We need to be able to manufacture and be like independent. Because if you didn't know, our largest company in the U.S., NVIDIA, they just design their chips. They're actually all manufactured in Taiwan Semi in Taiwan, 6 feet away from China, and we can't really have that. So that's why the NVIDIA took a stake in Intel, the government took a stake in Intel, and the future sentiment's good. But wouldn't buy them here, wouldn't buy it at this price. But they're definitely interesting, and I can see why they've done so well. And we're trying to be more independent. I started DCAing from watching your... Hey, Kanye's, what up, dude? That's awesome, man. How'd you learn all this? Well, hey, by the way, I'm not an expert. I sell nothing. I have no course, book, WhatsApp, Telegram. I'll never follow you, DM you. Please watch out for people impersonating me. I'll never follow you. Yeah, hey, best way to support me, though, if you want to help me out, best way to support me is to subscribe to my YouTube channel. I'm trying to build on my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio. But yeah, you can just type in YouTube Nathan Robert. We're streaming on there as well. You can rewind it. So here's Tencent. Sometimes I talk too fast. I'm sorry. Yeah, Tencent Music right here. This app is telling me that there is a, what is this? A double top. So they are in ADR. So that this is a Chinese company. So where does most of the revenue come from? Yeah, all the revenue comes from China. But let's look at their revenue right here. Let's see. Premium subscribers. They have 124 million premium subscribers. Their monthly active users are 533 million. Down from 570 million, though. Average month. Oh, their ARPU. This is the best metric. They make $1. They went from $1.47 to $1.63. So the money they're making per member is growing. So let's see the revenues. So we've converted the currency from Chinese yuan to USD. Revenues up 19. And whoa, is that real? That was real. They actually, I kid you not, have 30. Ignore this one quarter because that was a one-time adjustment. But yeah, they're literally a 30% net margin company with a fortress balance sheet. That's a great balance sheet. Like financially, I like these. I like these numbers. Their ARPU's growing, the revenue's growing, the net income's growing even faster. So they're expanding net margins. They're beating on expectations every quarter. Yeah, huge beat on revenue, net income, and EBITDA. So pretty cool, actually. You get a dividend and you get a 0.8% dividend yield. Hey, yeah, thanks for that. Yeah, hey, by the way, if you want to get this app I'm on, it's in the link tree in my bio, very first link there. It's a brokerage called Moomoo. Uh, they ask you for a bunch of information, but okay. Looking forward to your YouTube channel. Hey, thanks so much. Yeah, hey, I really appreciate that. I just lost my job. I'm going to risk my last 1K on stocks and try to live on the stock market. Wish me luck. Yo, that sucks. You lost your job, man. Yo, I would focus on getting a job again. With your last 1K, dude, I would just keep it in cash. You never know what kind of emergency expensive you need. But yo, I feel bad for you, man. I hope you're doing well. Um, let's see here. Do you like Palantir long term? Absolutely. Palantir is one beast of a company, but you're right. I like them long term, but short term, the valuation is too expensive. I'm talking like extremely expensive. If you go to their price to sales, not price to net income, not price to earnings, but just their price to revenue is 122. So really expensive, but here's why they deserve definitely a high premium than your average company. Check this out. If we go to where the revenue comes from, the government's 55% of it. A lot of police stations, the military, the Air Force use Palantir software, and check out how growthy it is. The revenue's up 49, after grew 23, after grew 15. Like the growth rate is growing over here. Pretty impressive. And not just the government revenue, but also on the commercial side with other S&P 500 companies. That's up 46 after 32, after 10% growth. So they're just on an absolute streak of growth, beating on expectations, obviously, every quarter. They had their first ever $1 billion revenue quarter. So they did $1 billion of revenue. And out of that billion, 330 million of it was after tax net income. So that's easy math, 32% net margin. Look at this balance sheet. This is insane. They literally have no debt at all. Completely debt-free, $6 billion of cash. So yeah. All right. So, do you like the pub? I actually have not used that before. Um, but fails about morals. Yeah. Speaking of Palantir, some people don't like them ethically because Palantir is helping out the ICE program. Um, so okay, or well, I guess ICE just is a subscriber. Okay, so ASTS right here. So this one is a huge growth story. So this is a big, you're paying for so much future. So check this out right here. And that's actually what's interesting about this company. If you look at their revenue right now, their right now revenue isn't good. $1 million of revenue a quarter, not great. But check out what they're expecting next quarter. They're expecting 22 million. And then the quarter after that, they're expecting 35 million. So the growth is expected to just be insane these next couple of quarters. So I think that's really what analysts are pricing in. That being said, analysts know the growth. I think if they miss on expectations with the momentum it's had and the high valuation, I think it might tank if they miss on any numbers. But yeah, it's really interesting to see this company convert from a revenue-less company basically to insane revenue. So you're really holding through the next 6 months through that volatility. Yeah, hey, yeah, nice, Sid. I agree. So Tom said Ally Financial. Hey, so yeah, this is like a bank, a fintech company. Wait, regional bank crisis flares, bank stocks plunge. Oh well. So yeah, Ally Financial, they haven't done great since 2019. They actually have done way worse than like JP Morgan, Goldman Sachs. But that's because of their higher yield. If we go to this well, actually, they're not even that much of a higher yield, really. You get a 3% yield with this company. That's actually a good dividend, 3% of your money back a year. But the dividend has been flat for 3 years, so there's no dividend growth really here. Automotive finance operations. So I didn't know that. So this Ally Financial mainly, or it looks like 66% of all the revenue is from automotive loans, basically. And yeah, that's down 6. So it just kind of lost the growth here. That their main business is down 6% year over year. Last quarter was down 7. So that actually might be why they're struggling compared to your average bank stock right now. They're also in insurance. That's really interesting. Insurance operations. Let's go to net income though. So net income, it's a bit choppy, but that's just how insurance companies work. And we kind of just want to see the growth come back. I can see why this one's underperformed. I don't love it, to be honest. Like revenue's up 2, last quarter was down 22, and it was up only 0.26. So like mid-single digits. I don't love that one. Okay, let's see here. I'm working at $16 an hour, saving any little of money I can to put into stocks. That's awesome, Header. That's your future self will thank you. Again, with stocks, I heard someone say like, I'm down to my last 1,000. I'm trying to risk it on stocks. My last 1,000. Again, I don't think stocks are what you like risk money in. I think the stock market, what we're trying to do is like to slowly build and preserve wealth with great high quality companies to own forever. The goal is to get like 8 to 10% returns a year, but snowballed. You start with 100, then it goes to 108, then 108 to 115, and then 115 to 130. Like it compounds and snowballs higher every year. But if you the way we pick stocks, like individual stock picking, I always aim for just 10% returns a year. I just want my stock to return 10% a year. And as an unintended consequence, by picking high quality companies and not selling, you can get like more than 10% returns a year. Like literally bought Comfort Systems this year at all time highs pretty much. And we're still up 100%. Okay. Yeah, only invest what you can lose. Exactly. But I would just, if you're looking for stocks to buy, just buy companies love, and use. Like Meta. If you're on Instagram and Facebook a lot, buy Meta stock. If you're on YouTube, buy Google. If you like McDonald's, buy McDonald's. And I own all these companies. I would just look through the S&P 500. Apple's another great company. John Deere. What up, Dave? Actually, let's cover John Deere. John Deere is actually I just clicked on JD. John Deere is now getting into drones that plant like seeds for you. Like it's these drones that like handle your field for you. But they also make these robotic tractors that just harvest your whole like potato field for you as well. So John Deere is a great agricultural commodity play, in my opinion. Farmers will spend more on their equipment. They still trade at a fair valuation just because they're somewhat commodity related. They can't really look, if we go back to the PE ratio in 2024, they trade at 11 times net income. Why? Because they're so commodity influenced. But right now, PE is a 23.9. They trade at 23 times net income. Even if you buy the stock right now, you get a 1.4% dividend yield. They're still making great net income every quarter. Over $1 billion in net income plus a quarter. I like how diversified that they are. So John Deere is a great one, I think, to just never sell. So someone said the NASDAQ ETF. Yeah, in my opinion, the best way to get exposure to the NASDAQ 100 is buying QQQM. Don't buy QQQ. I have QQQ overlaid over the stock. These two ETFs are the exact same thing. Both are the NASDAQ 100, but QQQM actually has a 0.15% lower expense ratio. Like, this is a phenomenal ETF. Like, this is the reason it's done so good is because it's so tech heavy, and tech just always outperforms. And look at this. It owns NVIDIA, Microsoft, Apple, Broadcom, Amazon, Meta, Google, Netflix, all companies that happily buy and own individually. So what stocks has the best dividends? Hey, that's a good question. So there's multiple kinds of dividend stocks. I got such a wide category. Like if you look at the top left, this is called my dividend only portfolio where every stock in here pays a dividend. But notice all these are like dividend growth companies. Like Meta has a 0.4% yield. Google 0.4% dividend. You're not making much. But one of my favorite dividend stocks is McDonald's. You get a 2.5% dividend. McDonald's is really a real estate royalty company. But if you're looking for a little higher yield, Iron Mountain is a REIT, a real estate investment trust, and they're in data centers, and they have a 3% dividend yield. And their dividend's super safe. They have a rule where they never let their dividend payout ratio get out of the mid 60%. So safe 3% dividend yield. Yeah, Realty Income is that's another. Realty Income, some of these other names, you buy them to more maximize your income. Like Realty Income, this company right here pays you a 5.4% dividend. So you're getting over 5.4% of your money back a year. And they actually pay you a monthly dividend. I kid you not, you get paid a monthly dividend. It's completely sustainable. They do triple net leases. They're a REIT. But here's the thing, these don't really outperform, the tech-heavy S&P 500. This asset or this REIT is actually lower than it was in 2020. So you bought the stock 5 years ago, you're slightly down, but you buy it for the reliable and sustainable dividend income because their dividend is safe. They even have a little bit of room to raise it. Coca-Cola is an interesting one. Let's see. Yeah, REITs are interesting. Yeah, because they have to pay out most of their income in the form of a dividend. So their normally high dividends you see on REITs are actually sustainable. To be a REIT, 90% of your assets have to be real estate. Any good energy ETFs? VPU, I like it's not so much energy like oil and gas energy, but the utility business. These regulated utilities literally get government, like if they don't get their certain returns a year from their customers, the government makes up for the difference. These regulated utilities literally on average give you 6 to 7% of your money back a year, no matter what. But also, they don't have much pricing power like Constellation Energy has been. Constellation Energy is actually an unregulated utility, and they have been able to price whatever they want with these C&I companies, unlike some of these other ones. But VPU is a great ETF that literally, and this doesn't even include the dividend. Honestly, let me actually pull it up on Webull. Let me show you this stock with the dividend reinvested. It looks way better because most of the returns you do get are from a dividend. But the returns here have been pretty good, about 6 to 7% a year. Okay. Hey, what up, Dr. One Fly? Hope everyone's having a great day, dude. Thanks for all the gifts there. I really do appreciate that. No way. But one of my energy stocks actually owned Constellation Energy. I also own Murphy USA. This is like your oil and gas play. Eunice said CDE, please. Oh, then we'll get a Caterpillar stock. I like that one too. So this is Coeur Mining. I think it's a gold play. Maybe it's uranium. Let me double check here. Oh yeah, so these are all the mines that they own, Yeah, it's a gold play, so pure gold play, probably just following the price of gold. So yeah, if we go to their numbers right here, it looks great. The sales have doubled, the revenue's up 116, and the net income is 70 million. Record net income quarter. They used to lose money every quarter. Now they're actually making a bunch of net income now that the price of gold is so high. So yeah, I guess if we actually just compare this, let me actually compare the stock price to the actual price of gold just to see the difference of how they're moving. So IAU gold, well, actually, look at that. CDE has done way better than IAU. Oh, I guess when we go to the weekly, it starts to like fix itself. But anyway, there we go. How about Main? Yeah, Main Street Capital, that's actually a BDC. They're just like REITs where they have to pay out 90% of their taxable income in the form of a dividend. So Caterpillar right here, this is a cool heavy machinery company. And they're at all-time highs right now, and they deserve to be at all-time highs. I think they also just acquired a company. Yeah, look at that. Caterpillar to acquire RPN Global for $1.12 billion for their mining technology push. That's pretty cool. Caterpillar leads heavy equipment telematics market growth. Caterpillar strengthens turbine market position. Okay, well, anyway, this is a great infrastructure play. Even if you buy the stock now, even right now, you get a 1% dividend. This is a dividend growth play because the dividend just goes up every year faster than inflation. And yeah, energy and transportation use their stuff. Construction industries use their heavy machinery. Resource industry. So I just love their numbers. They're easily making $2 to $3 billion of net income a quarter. Caterpillar is a great one. One of the good S&P 500 names. Too late to buy Cat? Yeah, probably too late to buy them, unfortunately. Yeah, they remind me of like United Rentals as well. Like these whole like infrastructure plays, like John Deere a little bit, but they've all just like been on an absolute monster rally the past 5 years. Someone said Beyond Meat. What up? I eat fries. Yeah. Oh, well, let me look up ALMU. I forgot to get to this one. So this is Illuma. Very, very small company worth $300 million, but the stock's done pretty good. Let's go figure out what happened here. So what do they do? This is a semiconductor play. So let me check out the numbers here. Revenue is $1 million a quarter. So you got a lot of future growth that you're paying for here. So they're doing pretty much 1 to 1.5 mil of revenue a quarter. Analysts are expecting 1 mil next quarter. I'd just be really careful with this name. Actually, they're not losing any money. So actually, that's so interesting. They're losing no money at all, or a couple $100,000 a quarter. They can easily afford that. They have a good balance sheet. They must have beefed. Yeah, they diluted you, but it beefed up their balance sheet. Anyway, ALMU is interesting, but I wouldn't keep a meaningful size position in that one. So yeah, the thing with Beyond Meat is I'll just kind of, here's why this stock is at an all-time low. Oh, yeah, we'll get to TIGR. So yeah, America has basically responded no to plant-based meat. But if you look at the top right, this is a $49 million company. Just kind of think about this from a like just logical point of view. You buy the whole company for $49 million, or you're buying a company that lost 30 million, half the company, and then 50 million the last quarter, 44 mil, 30 mil. Like And look at this balance sheet. They have so much liabilities, twice the liabilities as assets. No wonder this company is at all-time low and bankrupt. And I certainly wouldn't buy the dip on this one, trusting that it's going to go up. I mean, maybe there's going to be some RSI, bounce on them, or I don't know, but I wouldn't trust anything meaningful in them. Yeah, let me give you a warning on this company right here. Someone said thoughts on ET. This is actually Energy Transfer. This is actually an MLP. And this actually, you're not buying stock in this. You're actually buying units. So what does MLP stand for? That's actually a master limited partnership. And because it's an MLP, they actually send you a K1 tax form because you're a partner in the company. You're not a shareholder, you're a partner. So just know they send you a annoying K1 tax form. I accidentally bought an MLP when I first started investing. It cost me $200 with an accountant, but for tax simplifications, wouldn't buy this one. But if you're okay with that, then you get a great yield. With these MLPs, they have great dividends, a 7.8% dividend. So you're mainly just buying that for the dividend every year. Any, stock price appreciation on top of that would be good. Again, this stock is the same price that it was in 2018, but you're mainly buying it for that 8% dividend. And you maybe just hope for 1% appreciation a year in stock on top of the 8% dividend. But we haven't seen that for 7 and 8 years. Ooh, said NVIDIA. Yeah. Ooh, we can only look at a couple more stocks. I got to go in 5 minutes. But by the way, we're going to be live in exactly 6 hours from now. We're going to be streaming at 8 o'clock tonight when the market opens. But yeah, by the way, if you wanted to follow me, we stream every single day, twice a day. Sometimes I sell nothing. I literally have no course book, WhatsApp, Telegram. I'll never follow you, DM you, none of that. So anyway, here is UpTech Financial right here. I actually really like this name. I think they're worth looking into, actually. So they're a $1.7 billion company. And check this out. This is the cool metric we get. I've focused on the paying clients. Their paying clients went from 0.98 to 1.19, a huge 25% increase year over year. And that has done wonders for their net income. So first off, the revenue, the top line is super growthy. Revenue's up 58. They did 130 mil of revenue. Out of that, 41 million of it was after tax net income. And that's not some one-time adjustment either. That's after paying their 20 mil of tax. That's insane. They have a 30% net margin, highest margin ever. So I actually really like this name. They beat by double on the analyst expectations on net income. That's crazy. The Tiger is really cool. Ooh. Okay. Lucid Group, do you think the spike is possible? Yeah, I would stay away from Lucid, unfortunately. Ooh, Pepsi stock. Wait, I just said I wanted to look at NVIDIA. I want to look at NVIDIA after this. And then, yeah, Suro Capital, that's a BDC. Their dividend is fake. But yeah, here's PepsiCo right here. The reason the stock is kind of flat from 2020 is because they've done great recently because they're answering their growth concerns. They took an 8% stake in Alani or Celsius stock, I should say. And for doing that, they actually gave Celsius Rockstar Beverage. Rockstar Beverage used to be owned by Pepsi. Now it's owned by them. But one reason people have been disappointed with Pepsi is just because of their slow growth. Again, growth concerns. This does not beat inflation. The most recent quarter revenue's up 2.6. Last quarter was up 1. It was down by 1, down by 0.2. Low single digit growth companies. So we kind of just want to see the growth come back, but they're making good net income. And I love the dividend here. They're making $2 to $2.5 billion net income a quarter. And then they just share that with you via dividends, 2.6% dividend. So yeah, interesting. Again, I don't really expect them to outperform the market in the long run, but they are interesting. So let's look at NVIDIA right here. Obviously, this is the world's largest company right here. So what is this right here? NVIDIA went from 95% market share to 0% in China. I think that's a mistake for US not to. Whoa, I didn't even... Wait, what? NVIDIA market share went from 95 to 0 in China. Well, that doesn't sound good. Okay. So let's see the news down here. NVIDIA's China market share plunges to 0. So that's some real news. Okay, that's not good. Alibaba Cloud System reduces NVIDIA GPU dependency by 82%. Well, looks like we might have some bad news for next week. When did that news come out? Okay, well, let's go look at their numbers. My semiconductor play is AMD, but check this out. Their PC GPU market share is a 24%. So obviously they've been growing their market share for GPUs. They have this automotive software. It's like a competitor to Tesla. Any company can kind of license it out from them, which is cool. But they're mainly, data center play. And they've been selling these chips for a huge premium. The CapEx from Meta, Google, Amazon are all, OpenAI, Oracle, they're all deploying money on NVIDIA chip orders for their data centers. And they've been able to charge ridiculous premiums. If you go to their net margin, they have a 56% net margin. So you could spend $100 on one of their GPUs. They keep $56 of it. Pretty insane, the net income they're making. So one thing that if I'm looking for a semiconductor play, I'm not buying NVIDIA just because of this fact right here. If you look in the top right, the market cap, NVIDIA is worth $4.45 trillion. So NVIDIA is worth $4.45 trillion. For you to double your money, they have to be worth now basically $9 trillion. But that's why I actually bought AMD over NVIDIA a while back, because AMD is only worth $378 billion. So I think it's an easier double on NVIDIA or on AMD than NVIDIA. And now I'm thinking about this. If NVIDIA is worth $4.45 trillion, that China stuff is interesting news. Yeah. Yeah, that was interesting. Yeah. China takes on Taiwan. Yeah, that's a big risk. That's why we're taking stakes into Intel. So let's look at, all right, I'll pull this one up for you. SSSS stock. So this is Suro Capital, a BDC, a business development company, which means they just give loans to other businesses. And if we look in 2021 at the bottom here, you see all these orange dots kind of in the middle. Those are all their dividends. And they paid, I'm talking like 200% dividends that year. Yeah, look at the current stock price. The current stock price is $8. In 2021, they paid you $8 in dividends, but in 2022, it was only 10 cents, and now they don't pay a dividend. So they don't pay a dividend anymore, but is the growth back? Let's see. Well, their net income just spiked. Let's see if that was a prank. It was. So, dude, this company should be zero. It's bankrupt. That sucks. The revenue is $160,000, and it's down 83% year over year. So if you're wondering, that's definitely fake net income. If you're go to the revenue, it's 167. How did they make the 62 mil of net income? Well, actually, if you go to their cash from invest, it's not going to show it, but basically they sold an asset. They sold an asset to get that money. The revenue's nothing. I would not trust anything meaningful in this company. What's the market cap? Yeah, it's tough. Is SoFi a good buy right now? It has such good fundamentals. It does have such good fundamentals, but yeah, I see what you mean. SoFi is not a good buy right now. It is too overvalued. I do own SoFi, by the way. It's another stock that I regret every share I've ever sold of. But yeah, we got 24 shares of SoFi left, and we bought SoFi. I'm talking like we've been bag holding that one. We bought it way back there. All right, this will be the last stock we look at. Sadly, I got to go. But if you guys want to hit the follow button, we'll be live in exactly 7 hours from now, and actually 6 hours from now. Yeah, right here, SoFi, the reason people are taking them serious, and the stock price appreciation that they've had isn't just momentum, it's real because of their real growing fundamentals. Check this out. Their financial services right here is what justifies the high valuation. Look at this. The financial services revenue is up 105, after it grew 80, after it grew 222, after it grew 260. So absolute growth beast, beating on every expectation. The orange lines, what the analysts expect. Every quarter they beat on revenue, they beat on net income, and they beat on EBITDA by a huge margin. So I think just people are taking SoFi serious. Revenue of 850 mil, net income was 97 mil, pretty much 100 mil in net income. Just crazy. But yeah, they're still trading at like a 50, 60 times next year's net income. So yeah, anyway, I hope you guys have a great rest of your day. That was the stream. I'm going to give a quick portfolio update, but best way to support me if you wanted to, hit the follow button, hit the like button, and subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio, but you can just type into YouTube Nathan Robert. As soon as this stream is over, literally as soon as this stream is over, I'm uploading a YouTube video on a new stock that's on my watch list. Maybe I should go ahead and tell you guys. The new stock that I did a whole analysis on in that video is Life 360. I was looking at some of their metrics. Their ARPU, if anyone's heard of Life, it's a surprisingly weird company that's doing very well right now. They're beating on every expectation. They're finally profitable. They're making like 5 to 10 mil of interest on their cash a quarter. The growth is there. They're beating on every metric, every quarter on growth. So if you want to learn more about Life 360, literally in 5 minutes when the stream's over, I'm uploading the video of it. It's just like the format on this stream right here where I'm just on my phone. So anyway, YouTube channel is called Nathan Robert. And also Someone said, "What? Oh yeah, hey, if you wanted to get this app I'm on, yeah. By the way, this is a brokerage where you buy stocks on. If you want to get it, it's in the link tree in my bio, the very first link there. It is an affiliate link, full disclosure. So if you go and deposit $100, we'll both get some free stocks. But yeah, and then our next stream, I think we're going to be doing what I've been talking about for a while. It's where we look for really cool stocks and cool sectors and see if they're good buys. Like this, where I found one of my robotics plays, Symbotic. I was just in here looking in the robotics watch list, and I'm like, whoa, that's a cool one. I looked at their shareholders and the monkeypox beneficiaries. I don't know. So anywho, and you can track on this app as well all the super investor portfolios. Like check this out. The Nancy Pelosi tracker. They have to make all their trades public by SEC law, and you can see all that. So anywho, yeah, if you want to get this brokerage, I'm on Linktree and bio, first link there. But yeah, here's a quick portfolio update. This is our buy and never sell account where once I buy a stock in here, I legit try and never sell it. Our most recent purchase was actually another share of Amazon. I bought one more share of Amazon on Friday. Think that's also a great never sell company. Another company I've been buying as a new position is Ferrari. Just bought my first ever shares the past week here, basically. And Murphy USA, Murphy Oil. So that's our Moomoo account. We also have this is our risk on Webull portfolio. So check this out. Webull, here's our open profit and loss. I love being fully transparent. We're up 19% all time in here. And yeah, we have some losers and some winners in here. Like we're down bad on UiPath, Zoom, Sprouts Farmers, Progressive, but we do have some big winners in here like AMD, Robinhood, SoFi, Reddit. I got Disney, Supermicro, Clear Secure. Has anyone seen those Clear Secures machines at like the airports and stuff? Power Solutions, P6 is cool. Anyway, and then finally, I have so many portfolios. I know, I'm sorry. Well, actually not last one. We have one more stock portfolio after this, but this is our dividend only portfolio where every stock in here pays a dividend. And no way. Real quick, shout out to the homie Terrence. No way. He just became a YouTube member. Thank you so much, Terrence. I hope you're having a great Sunday. So anyway, year to date, we're up 17%. In April, we were down bad in April. We were down, 14%. Now we're up 17. But yeah, here's our total percent change on every stock in here. Every stock in here is also in the S&P 500, Meta, Google, United Rentals, McDonald's. And then we have a Roth IRA finally. Roth IRA is just a tax-free retirement account. And I can't wait to see what happens because on Friday, our Delcath systems went up 26%. So that's really, again, our Roth IRA is only $3,000, but yeah. Oh, and on Friday, I bought one more share of Iron Mountain. This is a company with a 3% dividend. Bought one more share of them. Uh-oh. Well, I don't even know why I'm filling out this CAPTCHA. Anyway, hope you guys have a great rest of your day. We're going to be live in exactly 6 hours, literally exactly 6 hours at 8 p.m. Eastern. At 8 p.m. Eastern, we're going to be live. The market will be open. See you then. See you later. Hey, see you later, German. Oh, Life 360 is definitely overvalued. Yo, the thing, German, is really cool as I go over in that video. Life 360 kind of reminds me of like a Spotify, a Netflix, what's that called? Duolingo. Like they all trade at high valuations. There's also this conspiracy around Apple having to basically, if you have your Life 360 subscription through Apple App Store, Life 360 can now make 30% more money than before and not have to pay the fees. Anyway, you'll learn more about that in the video if you want to learn more about Life 360. See you later. Shout out to Terrence and Reyes and Tom, Thunder, Sid, German, Tom, Ken, everyone, Stocks, Prime,